Ladies and gentlemen, welcome to the Midday Market Monitor. In today's video, we are going to be going through a myriad of all the stock news that we end up seeing, any new information that ends up coming out. It's a Friday. There's some geopolitical tensions that are increasing, so we'll keep an eye on that. But we also have a few guests that will be joining us for interviews throughout the day, as we are here between roughly now and 3:45, 4-ish. So those guests should be a lot of fun. And yeah. Okay, so starting off the day, I really wanted to get into Jensen Huang end up tweeting out his first tweet. Earlier this morning, he literally had like 0 followers. Now he has 235,000. And he was already verified and the account was updated, and Elon ended up somehow getting him this pretty easy. But then Elon ended up retweeting this post. But he ended up talking about open weights in American AI leadership. Now, we could go through this whole post. Let me try to open this up really quick. There we go. And many companies ended up signing this, including Palantir, including Microsoft, Tesla. Like, Elon also said that he agreed with this message as well. But we can go through some of this if you guys want. I'm sure many of you guys have already read this, but essentially just saying, in the 1980s, early open source software pioneers challenged the prevailing belief that software would advance only if companies kept tight control over their code. This movement pushed for a transparent ecosystem where developers around the world could study, modify, and improve software. Software developed by the open source community now supports most of the internet and underlies systems used by the world's largest technology companies, as well as the US military and federal agencies conducting scientific research, cybersecurity, and other critical missions. Open source did more than lower the cost of software. It created a shared foundation of knowledge on which generations of American engineers and entrepreneurs built their institutional sovereignty. I gotta clear my throat. The United States now faces a similar choice with artificial intelligence. Our AI leadership will be judged not by one frontier AI model, but whether the United States builds a strong, open ecosystem that diffuses into every sector. This is essential for creating opportunities for innovation and prosperity across the country. It requires expanding access to AI, encouraging competition, robust application layers, and giving Americans greater control over the technology that they rely on. Open weight models, AI models that anyone can download, inspect, modify, run on their own infrastructure, are an important part of this foundation because they make advanced AI more accessible, adoptable, and widely available. Open weights expand access to the AI ecosystem. Startups, established businesses, universities, public institutions can build on advanced models without training one from scratch or paying frontier model prices for every task. Open weights let every organization match the right model to the right job at the right cost, reserving frontier scale capabilities for genuine frontier problems and running efficient, specialized models everywhere else. That discipline is what will make AI economically suitable as it is used to scale into billions of everyday tasks. Americans win the AI era by diffusing it into the workflows of factories, hospitals, farms, classrooms, and Main Street businesses. Open weights also strengthen competition, and competition is what keeps the gains of AI broadly shared rather than concentrated in a few hands. By allowing many organizations to build, adapt, and deploy advanced models, open weights create rivalry not only among model developers, but also across cloud chips. Let me change the page here. Applications and services. That competition spurs innovation, drives down costs, and distributes the benefits of AI broadly across our ecosystem. Open weights also give customers greater control as organizations invest in AI. They want to know that they will not become locked into a single provider or lose that knowledge or capabilities that they build over time. Open weight models help provide that assurance by allowing organizations to control their own data, evaluate and adapt models to their own needs, and deploy them wherever their business requirements demand. And as organizations create value with AI, open weights allow them to own that value through self-improving models, specialized capabilities, and accumulated knowledge that drives American sovereignty and prosperity. To be sure, open weights carry real and distinct risks. Once released, the weights are beyond the original developer's control, and modified versions are difficult to trace or reverse. But the right response to this risk is not to prohibit open weights. In a world where cybersecurity attackers use advanced AI, defenders need access to models with comparable capabilities so that they can detect, simulate, and respond to emerging threats. Open models broaden defense capabilities, increase transparency, and allow vulnerabilities to be discovered and remitted across many teams. In fact, openness may be one of the most important paths to AI safety and security. Relying solely on closed models is not inherently safe. They can be breached, misused, or fail in ways that outsiders can't even detect. And concentrating advanced AI capabilities beyond a small number of closed models compound that risk. It results in a small number of single points of failure, weakening competition, and leaves critical technologies in the hands of few providers. Open weights, on the other hand, allow a broad community of researchers and developers to examine their behavior, identify vulnerabilities. It's kind of repeating itself a little bit, but it allows for rigorous benchmarking and evaluation, red teaming, and protection tied to real and demonstrated harms rather than assuming that closed systems are safer by default. A strong AI system is not a foregone conclusion. Policymakers have an important opportunity to act. This includes expanded access to compute for startups and researchers, investing in shared training assets, data sets, tools, evaluation frameworks, and keeping the frontier plural by avoiding premature restrictions on open models that stifle competition or drive innovation overseas. These measures must also look at how strong application layers can expand sovereign use of AI across the ecosystem. Can I continue here? Did I read economy as ecosystem? I am a little bit dyslexic, so sometimes my brain sees the beginning of a word and just finishes it without me actually reading it. Really good for the job that I actually have today. That said, let me go to the last page. We're on the last one. Sorry, Jace, too bad, so sad. Okay. In shaping this ecosystem, don't tell me that's economy. Policymakers should be careful not to conflate legitimate model development techniques with misappropriation, distillation, or the practice of using one's model output to help train or improve another. Is widely used technique for model improvements, evaluations, and validation. It reflects a long tradition of learning from, building upon, and improving existing technologies. A tradition that has helped drive innovation since the rise of open source software movement. By contrast, unlawful efforts to extract value from a closed model raises legitimate concerns. Those concerns should be addressed through targeted legal and commercial frameworks rather than sweeping restrictions on techniques that help play an important role on AI innovation. The age of AI can be one of prosperity. With the right choices, why am I falling apart here at the last one? Open weight AI can expand opportunity, strengthen competition, extend American technological leadership, mitigate risk, and ensure the benefits of the extraordinary technologies are shared broadly across our economy. That future is worth building, and the United States should lead in building it. Now, this was backed by many companies, obviously, NVIDIA, Perplexity, Palantir, ServiceNow, Replit, Reflection, Mistral. There's a lot of really, really big names here. Meta, Microsoft as well. Look at the two names that are not on this list. You don't see OpenAI, named after open sourcing AI models. And then there was talk about OpenAI and all this stuff of them saying, hey, the reason why we're not open source is that we won't actually be able to get to scale, but we do believe in AI for all. They did not sign this letter. Okay. The other name is Anthropic, of course. They've never even made such claims. So the idea that they want like closed source models, I mean, that's up for them to want to do. But like this whole open AI foundation thing, empowering AI for all, this is sheer bullcrap. Anyway, NVIDIA is up right now, back up to about $211. Stock's doing all right. I also wanted to talk about Tesla as well. This company is selling off. Now, like Sam Solid said yesterday, it's not necessarily cheap, and we've not seen that, like a cheap valuation on Tesla in a very long time. But 300 versus 400 is a very different situation. Okay. I am not necessarily buying this company today, but as it sells off, I start to question, just like Palantir, am I buying, or is there a possibility to buy into a great technology name that still has plenty of upside if they end up getting, Cybercab off the ground, Optimus, all of these different things continuing to sell better and better cars, right? Tesla semis are in production. We still have the Model 3 and Model Y that continue to get refreshed, and customers are excited to buy those businesses. We've got the energy business. At what price is Tesla worth buying into again? Now, see, I was a big shareholder of Tesla. It was my second biggest position in my portfolio a little while ago. I ended up selling that entire position back in 2025 during the DeepSeek sell-off, and I brought my second biggest position, consolidated that all into NVIDIA, and instead of taking, essentially a 20% position and a 25% position, I put them together and made this massive bet on NVIDIA. I said that the price that I was willing, or the thing that I wanted out of Tesla, this extremely large growth, doing very, very well, is happening at NVIDIA today. I don't have to wait years to see it in Tesla, and yet I can buy it in a company that had, I think at the time, like a 60 PE. And they were seeing large, 50, 60, 80% growth rates. So, but as I ended up seeing that appreciation in NVIDIA stock, and mind you, that was absolutely a great play for me. I'm sure there would have been better plays if I had rotated that Tesla into an AMD or something like this. Like, we could always find what the better stock was. But versus those two companies, it was right for me to sell Tesla and put it into NVIDIA. At some point, NVIDIA stock will appreciate to a point where it makes up for too large of a position in my portfolio. Currently, it's roughly about 50%. But I don't want it to get into the 60s and 70s and all that. So I'm going to continuously trim as it gets bigger. And maybe I re-look into enter into a company that, fun fact for you, was actually the first stock I ever purchased back in 2015. I didn't hold it from 2015. I ended up selling it almost immediately, and then bought it back in 2018. But yeah. Oh goodness, if Tesla loses 300, it's going to 230. Wow. Okay, let me see what when my guest is coming. I thought they were coming on at noon. Okay. Just based on TA. Yeah, no, I got what you meant, Parsival. NVIDIA is now fading some of these gains. Oh, guys, this is fine. Not hour, 1 minute. We're fine. Okay. Meta down 0.4%. Let's see what the big movers are today. Monday.com up 6.5%. FG Nexus up 11.5%. Norwegian Cruise Lines up 5.9%. Does Chris have that in his stock draft? I think he does. AMC is up another 5.3%. There's been a lot of talk of, I think they crushed their Q2 numbers. I think they're still in potentially net losses, but they ended up seeing bigger gains than I think initially investors had thought. Toy Story 5, The Odyssey, many movies right now in theaters doing well for AMC. Shift 4 up 4.7%. Sentinel 1 up 4.8%. Adobe up 4.8% as well. Is it an IGV day? Software index is up 1.45%. Where's Palantir? Let's have a look. Palantir 123. But I have a guest here in the background. Are they ready to go? Just show me some fingers. Perfect. All right, ladies and gentlemen, please welcome the great and powerful Nate.
What up, what up? Sorry, I read it as can you come in an hour, not can you be on an hour.
Yeah, I wanted to do an hour.
Yeah, I'm down. I'm ready.
Brother, welcome.
What's up? Great day for, well, I mean, not a great day for talking about neoclouds.
No, I was just about to say that. Out of all the days that we could have done this, we've seen some ups and some downs on NBIS and CoreWeave and many of these other neoclouds that Nate here follows very closely. They're having some red days.
Yeah, just a little bit.
Now, do you have any? Is there any reason for this? I don't think I know why it's selling off here.
Yeah, I think honestly right now it's mainly because of the macro conflict with Iran and oil prices and rate hikes and all those sort of things. I think that's why. I don't really think it's AI specific, honestly.
Yeah, that's fair. That's fair. Well, I want to go through a couple of different stories. Not only NBIS, which I think is the one that obviously you favor the most, but I want to get your opinion on essentially all of them. I know that you've been doing some work on IREN as well, and maybe I've been learning about CoreWeave. But how do you differentiate these companies in the first place?
Yeah, so I mean, honestly, I think all three take different approaches. Obviously, I really respect and like the fact that CoreWeave is like, we know bare metal, we're sticking with bare metal, and that's where the route they're going. And obviously, they have the prestige. They also get GPUs first. They're usually the first to go live with NVIDIA's new generation. So obviously, they were the first with Vera Rubin, also the first to validate. And then NBIS kind of follows quickly behind. They just also got theirs up. Now they still need to validate. That'll probably take another few weeks or a month. But really, I look at them as just three different plays. IREN's land and power. They have a massive moat when it comes to their gigawatt structure.
Yeah.
CoreWeave is like the first market mover. Like they were there in 2017, 2018. And so they have the longest relationships. They partner with all the big boys like OpenAI and all of them. And then NBIS is more of like I would call them like a more of a startup sort of style and culture. And I think Roy actually painted a great picture saying like NBIS is the value meal and CoreWeave is the burger. And like just because, you go to McDonald's and you want the burger doesn't make it bad. It's just two different styles. And so I would kind of agree with that. Like CoreWeave is best with bare metal. That's why they have these contracts. That's why they have take or pay versus the other people in the industry. So
yeah, I think that's fair. But you have a bigger position in NBIS, I think, out of any of these.
Yeah, I am degenerately heavy into NBIS. Yeah.
When did you start investing in this company?
So I actually, funny enough, moved all of my NVIDIA to NBIS last July.
Okay.
So I had a lot of NVIDIA, and then I kind of were like, okay, NBIS to me at that time was just a leveraged NVIDIA play, literally. And so I just moved my NVIDIA to NBIS, and it's kind of been mainly NBIS since then.
Got you.
About a year, only a year, which is crazy.
Yeah, and even then, you can still find like huge multiples on your position. I don't know what the 1 year is on NBIS today.
I think 300% probably.
Yeah, 292%. about a $50 price target about a year ago.
Yeah, so far it's worked out well, but also like I understand the flip side of it's increased risk. Like NVIDIA's only up 20% since the time. NBIS is up 300, but if there's a down market, NBIS is going to be down 70 and NVIDIA is going to be down 20.
Yeah. No, exactly. So, obviously, there's a lot of different pieces to talk about Nebius, but I want to talk about some of the Google comments because I think it really is the highlight of what these neoclouds are really doing right now. Google ended up talking about in Q3 that they are needing a bridging strategy to capture market share, but also continue to, you know, grow and
Yeah.
give their customers, Google Cloud services. So they wanted to go to the neoclouds or third-party providers to end up getting access to more compute. Is this the bull case on neoclouds, or do they end up growing way past whenever there's this crazy demand supply shock?
Yeah, I think. Well, first, listen to that call. I got so pumped up when I heard them say we're looking for third-party providers. And for context for people in the audience too, like Nebius said, they specifically only want one more hyperscaler or AI lab deal. Now, I'm hoping they pick a hyperscaler. I hope they go with Amazon or Google because I think it's just less credit risk, more reliable company versus an a lab. And especially now that Jensen came out with this thing today, talking kind of about open source, I think he's really going to be
Yeah.
pushing back against these closed source models. Um, Not entirely because he still needs them as customers, but I think there's two angles to that. I think over the next 2-3 years, and I've kind of said this multiple times, that I think you could put your hand in a hat, pull it on NeoCloud, and you're going to outperform the market. I think it just doesn't matter. The demand is insatiable, but I think when you get past demand and there is a flattened out curve in 2029, 2030, who knows when it's going to be. I think then you need a company that differentiates, and that's why I sort of pick Nebius. Whereas I think CRWV and IREN are still really focused on bare metal because demand is insatiable. Whereas Nebius kind of, I feel like, looks at the whole picture. It's also operated as a massive company before, back in the 2000s and 2010s. And so I think they're just differentiated when it comes to culture and like looking at the kind of the whole AI sector as a massive picture. Like they acquired Tevili, which just partnered with SpaceX actually, or Grok, sorry. Um, they also acquired Egen, which is like model optimization. I just think they look at the picture a little more wholly. And also, I think in that open source article that Jensen just dropped, they partnered with 3 companies listed there. They partnered with Black Forest Labs, Reflection AI, 2 open source model
Yep.
companies, and then also CrowdStrike, which is sort of just like a classic partnership. But yeah, I just think they look at the picture more holistically and understand that the demand will shorten, and who knows what that is. But I think over the long term, they're actually going to be able to capture a lot more of that market share versus a CoreWeave or IREN. But I think right now, I think this decade, it doesn't really matter, honestly.
Yeah. No, that makes sense. Yeah, I really do like Nebius's approach. Like you said, the sort of value meal, but it's the software included, it's the full package versus maybe
Yeah.
CoreWeave just selling the GPUs. Obviously, there's still software there, but they're not doing the virtual machines and all of these things and charging extra premium for these companies. But the Googles, the Metas, the Microsofts of the world, they don't need that meal. They potentially, for the neoclouds, are just looking for the quote unquote burger, as you said. So,
Correct.
do you think that there's a worry with companies like Nebius that once Google and Microsoft end up bridging this capacity gap, that companies won't need a Nebius?
Yeah, I think that's a great question. And I've thought about that a lot because I do think that's probably long term the biggest bear case is these guys can just price out Nebius. But I think the way I look at it is Nebius is hyper fixated on this one solution and solving this one thing. Whereas I think obviously Google has 50,000 revenue streams and really rely on, to be fair, and so does Amazon, rely on these these hyperscalers to get their margins and really grow profitability. But I think honestly, in kind of how Arcades talked about it, the CEO of Nebius is sort of like they want to be just another hyperscaler. And I just think the more competition, the better. And I just don't think it's going to get to a point because I think demand's going to be here for so long that they're going to be able to build out, entrench themselves, work with these small enterprises, and just become another hyperscaler. And now it's not going to be easy, and they still have a long way to go, to be honest. Like they're still definitely not up there with AWS or GCP or Azure when it comes to like their software stack and everything they offer, but they're catching up. I think it's because they have a culture of, you got 1,400 people, you're in a speedboat, you're facing cruise ships that need to be able to turn around. And so when there's a market like this and an AI that's moving this fast, you want that culture that's going to be able to pivot quickly, make quick decisions rather than go with this bureaucracy of 80,000, 100,000 employees like AWS has versus the 1,400 at NBIS. So that's sort of how I look at it. Is I just that's also how I invest is like in culture and in the team, and that's I was really early into Palantir too, and so that's just sort of the approach I take.
Yeah. That makes sense. That makes sense. You're also like you said, invested in Palantir and I think Zeta as well, right?
So I will say, since this new drawdown, I'm 100% NBIS. And so I was in Palantir until early 2025, sold then. And then I'm also was in Zeta for a while, but I've kind of sold Zeta up every time. Honestly, this year, every time Zeta goes up, I'm just like, okay, I'm selling into strength because SaaS just is not getting what it needs, and then I was putting everything into NBIS. So I'm degenerately into NBIS right now, I can say, and pretty much 100% NBIS.
Where's your mic? It's cutting off sometimes whenever you get a little far.
That's right. It's right in front of me. Maybe it's weird.
Yeah. Try to keep it as close. Just because it's cutting out. Yeah. Okay. All NBIS.
Yeah.
All NBIS. And what is the sort of bottom of your at what point do you stop buying, and at what point do you start buying NBIS? Where are you finding this opportunity to buy in at?
Yeah, so I really like anything under 250 for me. Around that $70 billion market cap. But when we got to the high 200s, started pushing 300s right now, I'm not interested. And I'm sort of just using the approach of selling cash good puts, selling cover calls, making some premium. Anything under 200 for sure is like, okay, it's getting undervalued again. And then we hit those 160s. I was like, I got to go all in. And so that's when I kind of went all in. Still holding for now. It's so hard, man, because the landscape changes so fast. One new deal and it changes the thesis. One new one new model that comes out like Kimi K3, and then oh my god, like I just think it's hard, obviously. I think anything under 250 is where I kind of found the value as of now.
So how are you doing these covered calls strategies and these sort of things? Because the price has been so volatile that I famously am buried in some covered calls on NBIS. So how have you been able to write them or sell them and then also get out and
So I sell very conservative and I wait for massive green days. So that 20% green day we had Monday or Tuesday, whenever that was, I just sold really high $330 strikes for next week and still got like $3 in premium because these degens love to gamble, which is insane. And so now those cover calls are literally up 85% just today. So
dude, that's so for you got $3 to sell 330s a week out.
Yeah. Well, it was like 9 trading days out. And without even an earnings. Like usually you get higher premium during earnings weeks, but their earnings probably won't be until this first week of August. So I was like, this is ridiculous. I'll just sell some 330s and made good money on that. And then cash good puts are also really easy. Like I think even right now, like August 130s are still going for like $1 or $2. Like I just think when you have the volatile stocks like these, like NBIS, and other or like Palantir and other ones, like it's just so easy to play the both sides of the trade.
Yeah, exactly. No, that makes sense. No CRWV, no IREN.
I've considered CRWV. Personally, for me, IREN's management team, I'm not a fan of. I've kind of said this before too. Is like, I think right now you have a legitimate hyperscaler if you have IREN's power and land moat, you have CRWV's like prestige and first to market with GPUs, and then you have NBIS's team and culture. Those three, you combine those three, and I think you legitimately have a fourth hyperscaler immediately. But I just think with IREN's management team, that RSU package. I mean, firstly, the IREN like $50 million Golden State thing. Like, what are we doing? First of all, you don't have a consumer product. You don't have a SaaS platform. You just acquired one. There's no way you're that integrated yet. And so I saw comparisons of like, oh, Salesforce does this and Oracle. It's like, guys, these are multi-$100 billion companies that sell to SMBs. You're a bare metal provider. Two totally different things. And you're trying to compare the two. And $50 million a year when you only did like 15 million in AI revenue. Cool. Like it just doesn't make sense to me. And then same with the RSUs. It was like 7 or 8 million shares per CEO or per both executives. And there's no performance. So the stock could do nothing for 5 years and they still get that money. I've always been a fan of PSUs, like Anthony Noto had at SoFi, Elon Musk, all these guys that, I think performance stock options are great, but just getting stock for no expectations to me is silly.
Yeah.
Especially that much stock. Like they're like one of the highest paid CEOs based off that when they get paid. It's like insane.
For just existing.
And not having to perform. It's like, okay, cool, good stuff.
Yeah, that's wild. But CoreWeave.
Yeah.
What's going on with that one?
CoreWeave is interesting. CoreWeave to me is undervalued. I just think let's say we do have a market unwind. Like let's say these bond yields for Oracle goes to crap because it looks like they're not looking great. Credit facilities and people don't want to take on more debt for these opening AI or these labs and hyperscaler and neoclouds. CoreWeave is the first to plummet because they have so much debt. Now I think they have an ROIC on that debt. They can pay off that debt. I'm not worried about that. I just think the market looks at CoreWeave as a debt loading machine because they have tens of billions of debt and their market cap's tens of billions. Which, by the way, NBIS is going to raise debt for people that don't know. Like, it's not like this is some. I just think right now they look at it as this really high debt machine, and so I think that would be the first to fall when credit unwinds, if it does.
Yeah, I mean that's my sort of thing, right? Is like I always looked at CoreWeave as being, obviously the strategies have been different in the types of customers that they're going after, but the sheer size of CoreWeave is where NBIS wants to be.
Yes, exactly.
That's where those are their aspirations, is where CoreWeave 100%. Is today. And now you're already seeing them start to raise debt. And I thought it was weird because the market ended up rewarding not only a $750 million, GPU-backed facility, which is fine. Yep. Like that's not a lot. But then they said that this is going to happen much more because they have, what was it, like $40 billion in capacity to continue to build out to. So I'm just a little surprised that the market gave NBIS, the green light for the debt, but not the same for CoreWeave.
Yeah, it's interesting. I would totally agree that I think the reason NBIS had the premium was because their balance sheet's so clean, and that's sort of like the philosophy is, they have such a good balance sheet. Well, now they're going to have a worse balance sheet as they take on debt. And like you said, they were rewarded for that. I do think as well, though, that Friday was also just a green day for AI in general. And so I don't know if it was necessarily just NBIS getting rewarded, but also just entire buybacks for everyone buying AI at the time. But yeah, I guess maybe people are rewarding it because now it means no dilution. But it's like, okay, well, you're just raising debt like CoreWeave. What's the difference? Yeah, I do agree that NBIS is where CoreWeave, CoreWeave is where NBIS wants to be. I mean, even if you look at ARR metrics, like each company is 1 year ahead of the other. CoreWeave is going to do like 19 billion. NBIS is going to do 8 or 9. IREN is going to do like 4. Like they're all just a double of one another like a year before. Because like next year, NBIS will probably do 20 billion. IREN will probably do 8 billion. Like they're all just 1 year behind each other, which is pretty funny.
In CoreWeave, they both look a little bit weird whenever you compare them by market cap because CoreWeave, obviously, their enterprise value looks a lot worse than their market cap.
Yep.
And NBIS, in the same breath, if you end up taking a look at their revenue and these sort of things, a lot of it's not inclusive of their minority stakes in businesses like ClickHouse.
Yep.
So how much of your thesis is being weighed on the AV rides of the world and the ClickHouses that are likely to continue to appreciate in value?
Yeah, I think really early days, it was even more important to me because, back in 2025, they were like a $15 billion market cap, guiding for like 9 billion ARR and like all these subsidiaries. I do think long term, ClickHouse is easily the biggest player and will probably add. It also depends. They've talked about they might offload more of those subsidiaries as they want to obviously build more data centers.
Specifically, they said AV ride, right?
Or
did they say any of them?
I think ClickHouse as well. Any ClickHouse as they start to raise will also be diluted. Like before this previous raise, they had a 28% stake. Now they have 25. The next raise, they'll probably have 20, 22. But I do think that'll be a $10 to $20 billion stake for them if they hold it over the next 2 to 3 years because ClickHouse is just rocket ship right now when it comes to
Yeah.
their ARR and their growth. So for me, ClickHouse is actually a really big part of the thesis. AV Ride is, I don't know, man. It's more speculative right now. I'm not a massive fan of the whole like self-driving sector in general. We don't see the unit economics of it yet. I just feel like it's so much farther away than people want to admit. Same with the delivery robots. Like it doesn't make them much money, if any, for AV Ride. It's cool, and I think it's great for training, and just the technology side of it. But I don't account for it as much. And then Toloco and Triple Ten are like it's like a one contract for NBIS. Like they're nothing as subsidiaries.
How do you look at the Meta deals and the SpaceX deals as being negative or positive for these types of companies like NBIS, or do you just think that they're not correlated?
You just
Like
mean
signing Google and Anthropic and Reflection and, becoming some of the largest neoclouds overnight because they already had the capacity, they just weren't using it.
yeah, I think it's interesting. I really want to know like how that came. Obviously, it's probably a lot of it's because of Elon's relationship, and how that came up. But I think right now it right now doesn't matter. It's just bullish. Shows the amount of demand. It shows that companies can just overnight become a neocloud, if they have the capital and have the team, which is very few. Like I think SpaceX is the only other one that's ever going to do that. I don't know if there's going to be another company that just wakes up one day and goes, you know what, we're going to be a neocloud today. I think SpaceX just has a unique value prop and team and obviously leadership. So not too worried about it. Don't look at it negatively. But I mean, those terms were insane. Like, isn't Google paying like 20 million a megawatt or 30 million a megawatt? Something insane.
It's an insane amount.
For not even
way higher than market rates.
Yeah, it was interesting, but also just shows like the amount of like they're willing to pay whatever because of the demand. And we kind of heard that again on Google's calls. They're willing to offload to third parties.
Yeah, you get the capacity today rather than the deals that are being signed with NBIS. Like the most recent Meta deal was for 2027 to 2032.
Mm-hmm.
So you're signing deals today that you don't even see for 12 months.
Yeah, which is crazy. And that's, to be fair, that's why I think because IREN has that land empowerment right now, I think they're probably the easiest to get a deal like that when a company needs compute now. Whereas CoreWeave and NBIS are very, I think NBIS said last quarter they're sold out for the next like 3 or 4 quarters. So they have no capacity available. Now they're trying their best, it seems like, to sign co-locations. We've heard rumors of India, Estonia, there's another European country that I forget, but they're trying their best, I think, to expand co-locations and be able to get people on and could build that compute. But it doesn't happen overnight. It takes a long time to get that up and running. So
yeah, there's been a lot of locations all over. I'm curious how you feel about the sort of New York moratorium on data centers. How does this sort of factor into a CoreWeave or a NBIS or something like this? Is that a worrisome trend or a flash in the pan type event?
When that first tweet came out, or when I saw the moratorium tweet, I was like, I made a tweet saying like, oh no, no one is building in a state that no one wants to build in. Like who cares? Because genuinely no one is building data centers in New York for a reason. So like big whoop-de-doo. But it does show a possible sign of a trend. And that's where I'd be a little more worried. Like if we start to see multiple states come out and do it, then I'm a little worried. But for now, to me, it's just New York. It's just the crazy guy in the corner. Well, oh well. Well, if it comes out to be like Virginia and Washington and like more and more states start to be like, okay, we're gonna do a moratorium too, then becomes a scary trend. And then I feel like that becomes like a political thing that's going to be used in like a general election in 2028. Then I think that gets concerning. But for now, again, the reason I like NBIS is they're still diversified. They still have their 210 megawatt facility in Finland. They obviously have sites in Israel, and they have a site in Spain, and in Paris they have 210 megawatts. And so I just think having the international presence allows them to be diversified and not as risky or have as much risk as the US. But to be fair, 2 or 3 of their gigawatts is coming from the US. So it's not like it's nothing. It's still a majority of their future ARR. So it is concerning if the trend continues, but I think for now it's just the crazy guy in the corner. We'll see if it continues, really.
A lot more land on Earth than just in that one state, I guess.
Yeah. I mean, I just, and also like, it only gets concerning if we hear federal, because even if it becomes a few more states, most people are still building in Texas and Oklahoma, and I just don't see those states having a moratorium. If you ever see a state like
Cash
that,
cow for them.
yeah, literally, yeah. I
Yeah.
mean, it makes no sense as a state to do that. But hey, New York wants to do what New York wants to do.
Yeah, that's fair. What are the other metrics that potentially you're looking at on Nebius that get you excited versus just, betting on NVIDIA, like you said, or even, outside of artificial intelligence? Why don't you have just the S&P 500? Why such a concentrated bet on NeoCloud specifically?
Yeah, so I think, man, that's a big one. So first, I think obviously, beside instead of investing in S&P 500, Nvidia, even Meta, Google, all the other hyperscalers that are going to benefit directly, it's just risk versus reward, right? It's just I'm taking on more risk because I'm willing to take the upper edge bet of a company that might be doing, or might get a 5 to 10x market cap versus a 2 to 3x. Like, it's going to be hard for me to see Nvidia to go from 5 to 10 trillion in the same time frame where Nebius can go from 50 to 300 billion. Because I do think it's just a general trend. If Nvidia really gets to 10 trillion and the market rewards it for 10 trillion because they're continuing to grow, to me that means the demand is still insatiable, which means Nebius still gets those contracts, and so therefore you're just getting a leverage bet with Nebius when it comes to just pure investing. Why not other names? Well, one, I also work in enterprise SaaS and I work with large companies, working on like an AI agent platform. I don't want to name the company because I don't want to out myself, but I work with enterprises and I also see firsthand the amount of demand there is and see the conversations that are happening, see conceptually how enterprise customers are thinking about it. And I get so excited because we're so early. Like, the questions they're asking are so elementary and very just like, how do I optimize this agent thing? And it's just, we're so early. I think people think enterprises are like Google or in Palantir that are these massive, extremely complex and smart cultures, but you have a lot of these enterprises and SMBs that are just still trying to figure this out. I mean, a lot of SMBs still have crappy websites, and that was 20 years ago, And so I'm thinking about long term of just how big this trend is, and it just, to me, it looks like another 10 to 15, 20-year trend, obviously with blips along the way. And I just think Nebius will take a large part or even a small part of the market share and still be a massive company. And I also just, like, I'm a nerd, man. I love AI. I love tech. It just gets me excited to think and talk about it every day. And so it's also just, I like to invest what I'm excited in. And I just can't get excited in like McDonald's and like these other companies. I just prefer exciting investment styles.
Yeah, one of the things that, and obviously I'm heavily allocated in NVIDIA and have taken positions in, Micron and Lumentum and some of these companies, but they can also be considered very cyclical.
Yeah.
And that there might be this boom and then a potential bust, and you see margins end up falling and all of these things. And you're likely to see that at Nebius as well, in terms of the spot rates that they're charging today will likely come down as supply comes online. But the nature of a cloud business is recurring. You're paying for subscription. And so that's pretty exciting. And the reason why I have been going so hard onto the NeoCloud side and hyperscalers as well is just because of that recurring nature. It's the layer that actually will stay after Micron floods the market and after NVIDIA floods the market. AWS is still going to be there.
Yep.
Charging a pretty decent premium.
Yep.
But that does bring me to one of the maybe biggest concerns of the market, which is like let's call it the Michael Burry concern. Depreciation. As new chips come online, the old chips will become useless. And, the companies that have these 6-year depreciation cycles or 5-year depreciation cycles will have a wake-up call as to why none of their companies or none of their customers want H100s whenever they can book Vera Rubins. Is that a concern?
Yeah, I was going to say, I mean, look, I understand the thesis, but it's been right. It still hasn't been proven true. And also, I think that begs, sort of, it kind of comes with the understanding that Vera Rubins there's going to be so much of them that every customer is going to be able to have access to them. That's just not true. Because NVIDIA can also only build so fast. And so it's impossible to tell. And I understand the thesis, but I don't know when that's going to be. We don't see any slowdown in H100. We don't see it in Blackwells. We continue to see spot prices increase. Bare Rubins are just being validated companies like the models we have now have been trained on Blackwells, not Vera Ribbons. What happens when Vera Ribbons have been training models? And then we get to a point where, like, I just think that takes 2 or 3 years to figure out how efficient they are, actually how efficient the spot pricing, getting the market rate for those unit economics for the like. And then NVIDIA comes out with another chip. I understand that there, maybe at some point, Vera Ribbons make the model so powerful it becomes a declining S curve of like, okay, we're now flattening out on model performance and optimization. Like, there's not much more we can do, but there's no trend right now that I can see that. So why worry about it?
Yeah.
And to me, it seems like that trend is going to go for until probably 2030. So why sell now and wait for that possible moment in 4 years from now when I could just capture the market share in the game over the next 2 to 3 years at least?
Yeah. A lot of people, whenever I talk about, the amount of CapEx that's spending, I was just arguing with Chris Patel on this the other day, and he goes, so you think CapEx is just going to continue to increase? It's like, I think the likelihood that it'll expand from here exponentially is the same amount of it potentially going down. We're both guessing.
Yep, exactly.
We have no clue what the models are going to be capable of. We have no clue how much consumers are going to be able to pay for those new capabilities. And so, I'm going off the current trend right now. Enterprises seem extremely happy to pay for the, chips and the models and all of these things like this. And they can complain to Salesforce or ServiceNow and Palantir and say the models are too expensive, but also they're discretionary products, and yet they continue to come back day after day after day. So
exactly,
you can go ahead and complain.
And I also feel like we really fixate on the hyperscalers specifically because they're the ones doing hundreds of billions and looks like trillions in capex. But then, what if it becomes every company's goal? Every enterprise is now spending. Now they need to have a capex budget. Like, I just think we're thinking so minutely and a pretty small scale of just like, just the hyperscalers. Oh no, yes, of course, it's not going to be able to be that 100% year-over-year growth every year. Like, that's just not how it's going to go. But also, we don't see signs of slowing down, as Google just said they're going to spend significantly more in 2027, which sounds at least like a 50% bump.
UBS and JP Morgan put a $325 to $375 billion estimate for 2027 for Google's CapEx.
Yeah, they're going to spend what, 200 this year, so that's like, a 75% increase in CapEx again year over year.
It's insane.
It's insane. But I would agree though that I think my biggest bear case is component pricing. If memory continues to be insane, Google can't increase CapEx 75% again, can they? I mean, maybe they can, but I don't know. It's impossible to tell.
Yeah. There's only so much money that these companies have, especially now that they're already in negative free cash flows. And
it's also like at some point the debt markets are like, all right, guys, you've taken out hundreds of billions of debt. We got to relax, especially if that combined with like bad macroeconomics and the economy not doing well. I think that's a problem. So yeah, I think this CapEx isn't slowing down, and it's nuts. 350 billion of CapEx next year for just Google is gross. Like, it's crazy.
Yeah. Okay, sorry. I thought there was someone complaining about the sound or something. Okay. I also wanted to potentially ask you about, once self-driving in robotics and all this stuff, is this playing into your thesis, or is it just one of those things that's almost like a buffer for you? Like, I'm betting on AI, and if this also comes, I'm happy, and hopefully NBIS plays a part in that as well.
Yeah, I think right now I'm really just focused on the agentic movement and everything going on there. I think self-driving, obviously, I see Tesla and Waymo are expanding cities and still growing. But to me, it just feels so early that I don't even want to put it into my thesis until I see it's proven. And then in robotics, I mean, you heard Tesla. I think Tesla's call. He's like, guys, it's going to still take a long time. Maybe in the 2030s we see something there, but I think for the next 4 or 5 years, it's not even a part of my thesis, and it's just like a cherry on top. If it does come earlier, then I'm going to win even more. But right now, I just don't even see it playing out, intact. And so I think for me, I'm still just waiting to see those things fall into place. Like, if he ever does talk about, okay, we are going to be production ready for Optimus, and we are now selling contracts to warehouses, or whatever, then it's like, okay, now I can start thinking about this as we get
Yeah.
some unit economics coming out. But for now, it's a cute little toy that hasn't been released yet and isn't proven to be profitable. But I do think it will be when it becomes ready. But I just don't know when that's going to be, and so I'm not even taking that into account yet.
How do you model in a company like Nebius's profitability?
Yeah, so they've guided midterm for 10 to 20% EBIT margins, and so I'm kind of just using that as my understanding of where they're going to be. Now, obviously, they say midterm. I don't know what that means. Does that mean 12 months? Does that mean 36? To me, over the next couple of years, they've said 10 to 20% EBIT margins. But Nebius tends to be decently conservative with their estimates, and so I'm hoping we get to the upper range of 20%, and that's sort of where I'm leaning on for the next 3 to 5 years for Nebius. Um, yeah, that's more conservative base case. That's sort of what they've said. I know they've also said
Gotcha.
like 40 to 50% EBITDA margins in the next 4 to 5 years. So that's also kind of where I'm guiding on profitability or
Got you. Got you.
cash flow
And do you
metrics.
think that'll be similar across the neo cloud market?
I think to begin with, yes, because most of them have these bare metal hyperscaler deals and probably have decently similar economics. I feel like CoreWeave probably has the best economics when it comes to that because they have take or pay as well. Um, But I think over the next 2 to 3 years, very similar. I think that then these other companies start to differentiate over the next 4 to 5 years, and that's also why we've seen IREN buy and acquire a SaaS company, Mirantis, because they want margins. They probably also these hyperscalers and companies are like, hey, we need some sort of basic form of Kubernetes. We need some sort of virtual machines. Like we need something. And so you see these companies layering on software. And so I do think over the next 5 years, you see a differentiation, but over the next 2 or 3, it's going to be very similar margins because they have very similar hyperscaler contracts. But that's again sort of why I like Nebius because they're pushing really hard with also enterprise as well, which that changes the game and gives them better margins. And so I think over the next, like I said, next couple of years it'll be the same, but I think over the next 2030 is when you'll see a large differentiation, but not over the next couple.
Yeah. I had another question regarding the actual price of the stock. Like if Google in 2027 does do 350 billion, and potentially they end up signing deals with Nebius and this just continues to compound the market and there's way more spend than we initially had thought. What is the market cap that a Nebius could get to? I mean, there's been a lot of talk about neoclouds getting to 100 billion. Is your hopes for this company to be another 10x from here? Like, what's your hope?
My
What are you
hope,
investing for?
I mean, my hope is a trillion, but
Yeah,
that's going to take a long
yeah.
time. I think my legitimate belief would be probably closer to 250, 400 billion. Because I still just think we're in a very early, like, prove
And
it
this is on what
sort of
time frame?
mode. 5 or 6 years. So like 2030, 2031. Because I still think we're in a very like prove it time period where the market still doesn't actually believe the ARR numbers are going to come to fruition until they continue to post quarter after quarter actual revenue growth, actual EBITDA margins. And then I think it becomes in 2028, 29 when these neoclouds are showing even a squeak of profit, then it's off to the races because I think the market still just thinks these are unprofitable companies. They're not actually going to make any money. I've seen like Jim Chanos and a few others talk about like, we might talk about it too, but Nebius's asset light model, like, oh, they're waving the white flag. They don't want to spend on capex.
Yeah.
Um,
Yeah.
I think, I think 250 to 400 billion because next year Nebius is going to probably guide for 22 to 28 billion in ARR, and then the next year it's going to be 35 to 40 billion, and then it's just going to be this growth curve that people still don't believe. And you can see that disbelief in also Nvidia's valuation. People don't think Nvidia is going to continue to grow. That's why they're like crazy undervalued for what they're doing. Not crazy undervalued, but undervalued for what they're doing. So
The problem that I have with the not the white, I don't think they're waving the white flag whenever that asset light model was showcased. My concern is that they are realizing that they have a hard time going up against companies that have other ways of making money to help fund this journey, and that the companies that are purely neoclouds won't be able to make enough to pay for the next data center nearly as fast as the Metas, Microsofts, Googles, Amazons that can essentially build 2 data centers for Nebius's one. based on the money that they're making from the clouds and then the additional businesses as well. In an environment where supply and demand is so disconnected, that's fine because everyone is sold out completely. In an environment where customers are starting to choose based on price, based on availability, like on who actually has the best products, it now starts to give more favor to, okay, who is first place? Who is second place? And will the neoclouds ever be able to compete with the companies that have external software sales, other businesses that are funding the cloud side? Is that a legitimate bear case?
I think, yes, it's a bear case. Now, again, even if if Nebius or even CoreWeave get to, let's say, Nebius, I think, is on track for 5 gigawatts by 2030. I mean, we're still talking about 50 to 75 billion in revenue, which at a $50 billion market cap is still going to be great returns. And so to me, even if the bear case plays out to where long-term these hyperscalers eat Nebius's lunch, and by the way, I think I would put Nebius on a similar level of Meta, where Meta's still early in this game, and they've never really built a infrastructure cloud service provider. So I wouldn't call Meta a hyperscaler yet. They obviously have the capital of a hyperscaler and have the money, but doesn't mean they can prove it out. And also, I prefer Nebius's way where they kind of have, similar to Palantir, not a forward deployed engineer approach, but a customer specialty approach where AWS is sort of like okay, you can sign up, you're just another number for us. Nebius is really focused on specifically just this sector, specifically just these customers. This is all they care about. The only thing they're trying to win, and they're trying to win. And so I think over the next 3 to 5 years, it doesn't matter. But yes, long term, that is a bear case. Now, the asset light model, I do think that's there's two ways to view it. Obviously, is not waving the white flag, but hey, they realize continue to raise capex, and then it's just not a great approach. But I also think they saw the demand. They probably have customers saying, "Hey, we have the money, we have the capital, we just don't know how to do it. Can you help us?" And so I don't think they just did it because, oh my God, we can't raise capex, or if we do, it's a pain in the butt to build. But also, they probably saw this 2 to 3 quarters ago of customers banging on the door like, "Hey, we have so much money, but we just don't know how to build these data centers and don't know how to have a software stack. Can you help us?"
Yeah, the Allbirds and the Rumbles of the world that want to transition their entire business model.
Oh my God.
Cloud. They've got zero technicality, and that's what Nebius is there for.
Yeah. I think that Allbirds thing's hilarious, by the way.
Crazy.
Yeah, I think
that Nebius would be a good fit there, no?
Yeah. If they want to take some free money, 100%.
Yeah, you don't have any customers. Your consumer shoe customers are not going to translate into GPU purchasers. But you see a bigger opportunity than the sales market or than the shoes market. And you pivoting your business, give us your money, and we'll say yep.
Yep, 100%. And that's also, I think, also a part of the deal is, you give Nebius, it gives them their go-to-market sales strategy and helps get them customers too. So I think, like you said, it's like they have the know-how. They're in the industry. This is their sole focus. They only want to win in this sector. But yeah, I do agree that, over the long term, they can't outfund 350 billion in capex. They can't. They just can't.
Or have the margins in these sort of things to play pricing games.
Yes, exactly. Yes.
That's the next concern is that Meta, of course, Nebius probably has a better technical side on the software and everything. Doesn't mean that their 14 gigawatts doesn't exist by next year. And that supply still does flood the market. Now, the demand's probably still going to outstrip that, but we play this forward enough to whenever demand ends up leveling out with supply. And, how does Nebius compete with these companies that have just billions upon billions of dollars to throw at this problem?
Yeah, and also, is that 14 gigawatts for Meta, do they say that's active or just contracted? Do you know? I don't remember, honestly.
That's a good question.
Because I feel like 14 gigawatts active would be,
that's insane.
A pretty incredible feat if that's true. So I feel like if it's contracted, then it just sounds like sort of a similar situation as Nebius. Like it takes time to build these data centers. If it's active, that's insane. But I just don't remember off the top of my head.
No, you're right. Because what I remember is they said they have something along the lines of like 1.8 gigawatts live right now. And they wanted to open up 5.5 more gigawatts for the rest of this year. And that's going to be across all of the contracts that they've given out to CoreWeave and NBIS and all of these things. But just to set up 7 gigawatts from a single company in a year sounds next to impossible.
Yeah. Yeah. That's what I'm thinking too. It's like, that sounds nearly impossible.
Yeah.
And also, again, it's also just commentary. Who sees what they actually execute on? They're saying they want a double gigawatt, but maybe they get to a point where like, oh God, we just can't. This is way harder than we thought it was, because they're new to this as well. Like, obviously, it's very bullish estimates, but again, we'll see what they actually come up with actively by next year.
Yeah. No, it's an interesting space for both. Not only the hyperscalers, like you said, whatever you want to call Meta.
Yeah,
I don't really
they're going
think
to
they
become.
fit into any of them.
They're just trying to make some money.
Yeah, and you know what? It's like but that is a large customer opportunity as well. It's just these companies that are buying for their own purposes. It's almost like on-prem, like 5 gigawatts of on-prem. But that'll be another huge customer account, like enterprises that don't want to deal with AWS. And this is why I continue to be extremely bullish on a name like NVIDIA's. I don't know what cloud's going to win. I don't know, exactly what model people are going to use. I don't know if it's open source or closed source. I know that we're going to need more chips.
Yep, 100% agree. Yeah, 100%.
In terms of that, like, how do you think this whole Kimi K3 story, open source Chinese models, do you think that this is bearish at all for the AI story? Or is it just bearish for Anthropic?
I think it's just bearish for closed source models like Anthropic and OpenAI. I don't think it's bearish the AI sector. I think obviously we've heard it regurgitated 50 million times, but it's just Jevons paradox. When things get more efficient, people just use it more and more. And so I think it just becomes your open source model, and we've already seen this a lot, is open source handles your easy tasks like emailing customers and these simple things. And then these closed sources still doing your heavy workload of coding and everything else, and inference at scale. But if open source catches up to where they're just as good on the coding front, it gets really scary for OpenAI and Anthropic. But it also gets really scary for the RPO backlogs, right? Like 500 billion of Google's backlog. A lot of that is these two closed source companies. Same with AWS. So it definitely.
I'll give you another case really quick. In case AMD ends up showing off these amazing Helios racks and all this stuff, and it all looks extremely good, NBIS is going to be chip agnostic to, whatever their customers are asking for.
Yep.
I think it was CoreWeave that's already set up 100 or contracted to set up 140 megawatts worth of Cerebras chips. I think it's their first data center outside of NVIDIA. So whatever their customers are asking for, they're going to set up. It's kind of the bull case to the clouds as well.
Yeah, 100%. But yeah, and also seeing NBIS partner with Reflection AI. I think Minimax M3, another open source platform, and a bunch of open source platforms, they saw this trend probably a while ago and attacked it on the go-to-market approach and sort of like want to partner with open source. They also probably have, obviously, the partnership with NVIDIA. And it seems like NVIDIA is really kind of pushing this open source narrative too, and really trying to win that side as well with Neutron. So yeah, I think it's just more bearish closed source, but I am a little concerned that it may start to unwind this massive cycle of all these RPO backlogs, these $1 trillion market cap closed source companies. It gets a little scary, but I'm still seeing it and still watching it. So we'll see how it unwinds for now. I'm really curious to see though, like how Anthropic and OpenAI respond to this open source stuff. Like I feel like they've got to do something. Then instead of continuing to just train more and more closed source and continue to charge X amount and have expensive token costs. So we'll see. Again, it's sort of hard to tell where it's going to go. But
by the way, I don't say this in a rude way, but I disagree. I think that there's going to be a world for closed source.
Yeah, I agree.
I think that the frontier models are just not. imagine the amount of prompts that are going into Fable 5 that would have given you an equally or similar, answer on Sonnet 5. Like, help me with my meal plan. And that's going through
Yep.
Fable 5. It's like, you don't have to pay for that.
Right. True.
So, but I think that there will be questions, diagnose this cancer that's in my body.
Yes.
On the Frontier model that you will pay for that.
Yeah, I would agree. But I just think it becomes, it's really hard to tell because I think most of the things we're solving right now are these easier type of tasks, right?
Mhm.
When we get to these things like solve cancer, create a new, just create new products that we had, like just things like that. Yes, closed source makes sense, and we're not even there yet. But at least for what I'm seeing in the AI space right now, like most of it is still very, I would say, simple and minute tasks where open source can solve most of it, but maybe not as effectively as a Fable 5
I don't
or as
necessarily
a
mean like U.S. Department of Commerce came out and said that they were testing the closed source Kimi K3s, and not on solving cancer, but on cybersecurity questions, and they said it did not match up at all, and that the closed source models are still extremely dominant. So I always go to that cancer solving one, but I think the most immediate questions are the 0-day vulnerabilities and these sort of things that are extremely critical. And because they're not being distilled, and because which by the way, that report, I should have talked about that yesterday, that report that ended up coming out also goes to show you how these Kimi K3 models are distilled American models, and they're not being trained on their own, because everything that was blocked out of their point of view, they suck at.
Which is interesting. Like, it is interesting again that we even had that sort of like DeepSeek 2.0 moment, which I always find laughable. Every single time. I mean, this is the second time it's happened, but I feel like we've seen more and more slight scares. Just every time some sort of Chinese model comes out and even has somewhat similar benchmarks, and then it's like, oh my god, the demand is going to go down, and then the next day they tweet, "Hey guys, we're sold out of GPUs and we're really trying to build fast." Like, it's like, okay, it just again just creates the thesis of demand is still insane.
It's too funny. It's too funny.
The irony is hilarious.
And yet backlogs, like Google growing 82%, backlog expanded. That's what they're going through. That 82% digs into the backlog. Exactly. It's supposed to go down.
This is what I don't get either, is like, where's the Capex ROI? 82% growth year over year and 500 billion backlog isn't decent ROI. I get it's not
on higher operating margins.
It just like, what are we talking about? I don't understand why Google was down. What was it, 6 or 7% yesterday?
Yeah.
Off of that, I guess it's sort of just a scare of, oh my god, they're free cash flow negative earlier than we thought. But it's also like, it's just okay. I guess you can look at that one metric and just completely disregard $500 billion in RPO backlog. I guess it's fine.
Yeah. What does free cash flow look like next year on 325 or 350 billion about? Like, that's what I think the concern is. But I mean, what's their revenue growth and all of these things flowing down to net income?
What frustrates me is, like, you really think these companies are going to, I mean, we've heard this from Steve and you and everyone else a bunch of times. Like, you really think they're going to invest this Capex if they don't see an ROI? Like, you want them just to sit stagnant? I just don't get it. Like, if they wanted to be profitable, they could stop building right now.
Yeah.
And just churn in all this RPO and make a crap load of money. But they see even more growth. That should be bullish, not bearish. Yeah. If they stop building and start taking on this RPO as like actual recognized revenue, then it's like, okay, they see a demand curve flattening out. But because they continue to build and increase that 50, 75% year over year, well, that's the rumor. Again, it's like they see this backlog churning, and their RPO backlog could hit $1 trillion in a couple of years. And then it's like, what are you going to say then, right?
Also, I think people look at software and they just go, well, Google could just be doing 17% Google search growth without all the CapEx spend. But it doesn't work like that. It's based on their models is why they're getting higher conversion rates on ads, why they can charge more. Same with, Meta and Mark Zuckerberg. He talked about our models are what's helping us get higher conversion rates. It's why we're charging more. 100%. So it all flows back to the initial business. Without all of this spend, we might be in single digits growth or even lower. Like we don't know what it would look like. And then market share taking. If you are an advertiser and you're looking for the best return on ad spend, are you going to spend it on legacy Google, or are you going to go to Facebook? So if Facebook has better conversion rates and you get a better return on ad spend, more of your spend is going to go to Meta versus Google. So, it is a little bit of a prisoner's dilemma. And it's not just the cloud growth is why they're growing. That's why I think Meta versus, most of them is the worst hit, because they're doing a build out as if they're a hyperscaler, but not selling. But that just goes to show you the internal use that these companies have.
Yep.
And that's going to be seen across Amazon for all of their products and services and everything, for Microsoft, for Meta, for all of them, all the way down to every enterprise.
Yep. Also, just a random piece of news. NBIS is going to have Kimi K3 coming in a couple days. One of their executives announced, or one of their team members announced. So they're moving quick.
Can you actually help me? I don't know how to. Is it Agen?
Dude, I don't either. Every time I try to pronounce it, it's Agen. I don't know which pronunciation it is. I usually go with Agen AI, but I could just totally be butchering it, and I just don't know. Like, I don't know, honestly.
Agen AI. This was an acquisition through NBIS. They also, I don't know if it was an acquisition, but they did some sort of licensing deal with Clarify.
Yeah, it was more of a kind of like acqui-hire, it felt like.
Okay.
Kind of like, join our team, we'll pay you some money, and they didn't disclose anything. And also they wanted to expand into San Francisco, because Clarify had a headquarters in San Francisco, and I think they wanted just to kind of grow their go-to-market front and sales side and just network in San Francisco. Also just wanted to acquire like a couple geniuses onto the team.
Yeah.
It's sort of what it felt like.
Yeah, geniuses in a data center. Exactly, Nebius's business now. Except they're not in the actual chips. They're just geniuses, and they're all right. My joke is over. But they did both of those acquisitions, licensing, whatever it was. Roman Churin ended up showing off that this was the reason why they ended up buying those businesses, was because they ranked extremely highly on, I think it was bringing down latency, bringing up tokens per second for specifically Kimi K2.5 reasoning model was the benchmark that they did. Is NBIS sort of the place to go for Kimi models now after these acquisitions?
I think they're more trying to become the place to go for just open source in general.
Okay.
So Agen AI, what they were doing was essentially based very bare bones, getting the most tokens per GPU. Very simply, just token optimization. And then Clarify was more of like honestly, Clarify, I don't fully understand. It's more of like a networking optimization, like you said, not just GPU per token or token per GPU. And so they really are trying to just attack this open source front in general, I believe, and really become like, okay, you need to optimize, just open source. We're your place to go. We're going to take care of you. We're going to give you that white glove kind of customer care service. And so I do think it's not just specifically Kimi K2 or K2.5 or K3. It's more of just open source in general. Maybe those are just like more direct partnerships or better ties. I don't know specifically what's going on, customer relationship wise there. But I do know it's more of just trying to become one of the people to help you with open source. Because I think that's where they see the market going. And you kind of obviously see it now with, Jensen talking about as well. And so I think they kind of read between the tea leaves probably quarters ago, realizing the open source is kind of taking a lot more charge here. So I think that's where they're going. And that's also why you saw that, you're muted by the way, but I think that's why they saw that partnership with Reflection. And that's why they partnered with, I think there's 2 or 3 Google DeepMind engineers that started that company. And so I think they're just trying to attack open source as a whole, not just, related to Kimi or anything there.
That was a correct comment, by the way, from Sam Boned in the chat. Opus 5 is out and it's surpassing Fable 5 in almost every metric. So, and by huge points, like agentic terminal coding, 43.3% versus 33.7%. Versus Opus 4.8 at 21.1. It's essentially at more than a double.
See, this is where I genuinely, and maybe you can help me here, is I feel like I'm uneducated. Like business workflow is 26% versus 17. What 26% what?
I think it's an exam.
Okay.
Yeah, so my understanding is like they set up tests, and based on the type of tooling that it brings back an answer, and then through like thousands of questions, this is their test results.
Interesting. Okay.
Yeah. So like if it has agentic search, it's asking it to go and grab certain information and these sort of things. And then they returned with a success rate of 84.3% success rate
Mhm.
on the exams. And these are usually like browse comp would be probably the exam that they're all doing. And then that company is the one that sets out the tests, and then they can all compare equally because they're all
So
doing
when
the
we start
same
to see
evaluation.
100% and everything, do we know we're at the top?
Yes, but then new exams come out,
Great
you
point.
know.
Yeah.
Yeah. So
Yeah.
these were not the exams at all whenever we were looking at GPT-4.
This is where I feel like it's hard to even like, oh, it's so much better. It's like you just said, they can just create a new test. And then it's like, okay, well, what if knowledge work has the V3 instead of the V2? You know, I don't know.
Yeah,
I
but
just feel like
it's usually because the old tests we have just hit 100%. So they are getting
yeah.
better on the old stuff, and then now we're testing them
So they
in
can just-
harder and harder use cases.
They can always just make it seem like it's getting infinitely smarter by creating new tests that have harder parameters and just kind of
Yeah.
you
But
know.
they
Okay.
should inherently be getting smarter if they can solve the
Yes.
like I think the
yes.
one that was really interesting was humanities last exam. It was like 3,000 questions, and you needed to be almost like an expert in every single field to just get a question right.
Oh wow.
And if I remember correctly, we need to see some graph, but the earlier models were getting like 5% success rates. Now I think they're getting closer to like 40%. But you know, I think it was what's the Tesla self-driving guy that's gone on to he's joined Anthropic.
I don't remember.
He's one of the super names. Someone's going to say it in chat. Anyway, he said that some model companies are actually training their models to be good at humanities last exam. That they really do show up to be good at the tests. And so the tests don't actually say everything. You
Right.
kind of need hands-on feel with them. And that's why like the Kimi K3 stuff and all this, like, okay, the benchmarks are good, but now let's actually get a feel for it as well.
Yeah. No, that makes total sense. Oh yeah, Andre Karpathy.
Yeah, Andre Karpathy, that was it. Thank you. So yeah, he said that there were some models that were legitimately just like training to be good at those benchmarks.
See, that makes sense. Very similar to the Boston Dynamics robot, like trained on being super good at flips, so it looks like it's the same robot when that's all it could do.
Did you see the new unit tree video that came out today?
No, I didn't.
This is gonna blow your mind.
Oh god. Some like ninja robot.
It's insane. It's wild. I was watching this, like it came out early. I was like sitting in bed and I was like, what the I was freaking out. So this is their like terrain robot. And
Oh my god.
it's just wild, dude.
Oh, I did see someone tweet like, what are you gonna do if this thing chases after you?
Yeah, dude. That's so crazy.
That is creepy, dude. But also, like, what is the point of this? It's just a trained robot, like it's just,
you know,
I guess, but what it has wheels for legs. What is it gonna rescue?
Dude, it's gonna bring you food and water whenever you're out on these marathons that you're always doing. And it's gonna find you in a desert somewhere.
Okay, this is crazy. This does not seem real.
Yeah, wild.
Just comes up to me in the middle of the forest dancing with food on it.
Yeah. It finds you and celebrates. Yeah, see, it can hold 3 children.
Oh, I see. Yeah. Wow, interesting. Okay, now this actually, I would legitimately pay for if it could carry my hiking gear.
And so look at that. It locks the wheels in place so it can climb up.
That's insane. See, now that actually is legitimately, if that becomes decently affordable and I go on, because I really want to get big into hiking, and if I would totally use that as like a pack mule to carry my crap up a mountain.
This is what you're doing, the example that drives me nuts sometimes. Whenever I show you the robot like flying down a mountain, you're like, there's zero use case here. And then it shows it with a backpack on. You're like, there's infinite possibilities.
I'm like, wait a minute. This makes so much sense now.
Yeah. Like, you know,
it's charged via solar. Oh my, I'm thinking about this.
Yeah, there you go. 13-minute battery life. Yeah.
Yeah, I wonder how much battery life it does have, if it even.
Who knows?
I think it's
Who
got to
knows?
be recharged by solar, but
for these types of, I think, and they're already being used, but for police forces and search and rescue and stuff like that, I think that these robots will first be seen in a lot of, health and safety, fire, these
yeah,
sort of use cases first.
yeah. I think search and rescues are really great. I mean, it can just cover so much terrain so fast. The thing fly, dude. Imagine search and rescue. That thing just flying around, zipping
Yeah.
through trees. Like,
Yeah.
I feel like if you're lost in the forest, you don't want that to find you. Like,
Yeah.
even if like,
I was thinking
I'd
that
rather
you got
have
like
a human.
broken leg, you're on the side of a mountain, you just see this thing fly right past. It's going so fast it missed you.
Yeah. Oh man.
But and some people will say super soldiers and these sort of things, a little army of them. Like I get that, but this is what we have today, and they might be trained for very specific use cases of like, hey, watch it dance, and like we've spent a lot of time making this thing dance. But we are in the early innings of this. Like this is coming. The costs to manufacture these products are going to get cheaper and cheaper, and then the intelligence of these models, the object understanding and its terrain understanding and its environment is going to get smarter as the models get smarter. So that unit tree just got an update because Opus 5 just got an update.
Right.
And it's these compounding S curves that are happening all at the same time. And I think that the Nebiuses of the world and NVIDIAs and these sort of companies will likely benefit from a new amount of demand from our products.
100%. And that's why I'm, like we talked about before, like I'm still focused in the next 2 to 3 years, but if robotics really does see some crazy TAM, and actually, come to market, start being able to see some unit economics, then it's like, I think my expectations get blown. Like, it's like, well, what's, there's so much next than just agentic AI. Like there's like you said, robotic self-driving is even a big one.
Can I
and
play
that's
one
also,
more?
Go ahead. Yeah, go ahead.
Can I play another video for you?
Another dancing robot.
This is Jensen Huang talking about the semiconductor industry, if it's about to essentially, lose a lot of its demand. Like, are we in a cyclical environment?
Yeah.
Semiconductors, as you have lived, have always been a boom and bust industry. Are we due for a bust?
No, not for a while. And the reason for
So
that
this
is
time's different.
this time is different because this is not demand driven. Time is different because it's not seasonal, it's not demand driven, meaning seasonal demand driven. This is industrially driven, meaning the fundamental technology of computers is changing. We need a whole new layer of infrastructure in the world. We have energy, we have the internet, we have roads, we have railroads. We now need AI, the intelligence layer built, this infrastructure layer built on top of all of that. And this layer needs chips. I believe we probably need our semiconductor industry to be somewhere between, 5 to 10 times larger than it is.
Over what period of time?
Over the course of the next 10 years. And so it is way too small today which is the reason why memory is such shortage and, storage is such shortage and optical interconnects are short and packaging is short. And of course, TSMC's foundry chips are short. And so everything is in such short supply because it's not a cyclical nature. It's not demand from consumers. It's not because of anything like that. It's fundamental infrastructure related. And so the whole industry is short. I think we need to build up the whole industry several more times.
There you go. Your retirement's settled.
I mean, if that's true, it actually is.
Yeah.
So I always get nervous when I hear this time is different. And also, let's be brutal here. It's like he doesn't need this. He is very biased when he thinks this is going to happen because it directly affects his business. Now, he's very smart. He's been doing this for freaking almost 30 years, right? So like he understands the industry, but also he directly benefits from it. So you wouldn't see him ever, really, in my opinion, ever come out and be bearish and say it's going to go down or it's it's going to flatten out by 2030. No, he's always going to say it's going to 10x in the next 10 years. So it's sort of like you have to take it with a grain of salt. But also, he's in the know, and I do agree with his point that like this is an industrial movement rather than just some simple thing he was talking about. And so I hope it happens because I will retire by 35.
Yeah,
and be done. Because 5 to 10x a semiconductor from now is, oh my gosh, that would be insane.
I mean, there's definitely been industries where we've gone from having less supply to needing much more supply. So I don't know if, of course, I always think about this time is different, but I also,
I agree.
because that's the place that everyone goes to. I also think back to, okay, well, does nothing ever change then? Like, can we also say that nothing changes? Is that a also fair assessment? I don't think so.
Right. Yeah.
Whenever we were needing steam engines and all these things, they go, okay, well, once the cars get on the road, like there's going to be a huge boom in engines, and people go, oh, everyone says things are going to be different. It's like, well, it was.
Yeah. No, 100%.
Industrial revolution.
100%.
So
no, I'm totally with you there.
It's just whether or not we are going to be living through another revolution. And so far it feels like that, but there's been other times where it's felt like that. And it doesn't necessarily mean that there's not boom busts in the stock market as well. The internet absolutely was a major, major change. But even then, you saw some of the greatest companies in the world fall 80, 90% in their stock price before eventually becoming trillion-dollar companies.
Yeah, no, that's a great point. But that's why, I mean, again, it is different from then because there was no demand then, or as much demand. And these companies like Cisco and the other companies built out all of this stuff without demand. Whereas right now, it's basically like, hey, we need data centers. And they go, okay, we'll build some more. And they go, hey, we need more data centers. Okay, we'll build some. It's just, we're not building ahead of demand yet. Obviously, we don't know what's going to happen. But it seems like, and NBIS talked about it before, like for every GPU they have 4 to 6 customers fighting over it.
Yeah.
I think we're going to hear, we now have 5 to 7 customers fighting over it next quarter. Like, I just don't think that's going to, decline. And so I do think we're going through a different type of revolution, with AI. It honestly, to me, it always, you're always going to be wary, but it does feel different this time than other bubbles we've seen.
Yeah.
It doesn't mean there can't be a bubble too. Like by 2030, it could be a bubble, but I don't think it is right now.
I mean, the valuations don't seem bubbly to me.
No, not at all.
I think the most cyclical businesses are being treated as such. Micron with like a 6 times forward PE seems like investors are worried about the cyclicality of that business. They don't believe that they're going to make $50 billion a quarter in perpetuity.
Yep. And I think where it becomes a slight bubble is where you start to see probably all of these companies start to become profitable. When you start to see all these neoclouds become highly profitable, if they do, all these like massive amounts of profitability, then it's like, oh my God, this is a boom. Then that's where you see a top. Right now it's speculation because a lot of these neoclouds, none of them actually are profitable. Same with a lot of these co-packaging and photonics and these really small semiconductor plays like Cerebra, none of them are profitable yet. And so it's all speculation. Oh, we don't believe it, we don't trust it. So they're getting traded a little lower. But when they do become profitable, because I do believe most of these companies will because of just the boom, then it's a bubble. It will get to a bubble at that point. Because then there's a belief, then there's hype, then there's all these things. Which you saw a lot in 2020, 2021, and obviously a crap load in the 90s, 9s, and 2000s.
Yeah, the only thing I'm struggling with that comment is that like in the .com, it was because we didn't see profitability. And say the bubble starts whenever we do see profitability. It's like that's the one thing that the .com didn't have.
Yeah, I mean more of like
it'll appreciate a lot once we see profitability.
Yeah, I think it's like 2020 where it's like they were profitable, but it grew. The valuations grew to like 900 PEs. That's more of what I mean. Not a
stuff like this.
Yes, exactly. Yeah. Not like a credit system bubble where everything blows up. More of just like NBIS gets to like some ridiculous 2 trillion valuation, something crap, insane like that. To where that's where it's like, okay, that's a bubble.
Yeah. And for your and I's sake, I hope that does happen. I hope that bubble does happen.
I hope that does happen. You'll see me on an island, and I won't be on here again.
All right, brother. This has been a great episode. Thank you so much for
Appreciate it, man.
Coming on and joining me here today.
Yeah, man. Thanks for having me on. I appreciate it.
I'll put your links down in the comment section if people want to go follow, and you can also see it there. His at for Nate. But let me put this in the YouTube as well. I'm going to be continuing on here. We're doing much longer shows these days, but hopefully you can come back whenever you have some time and talk some more. Whenever we get some NBIS and this sort of news.
Oh yeah, dude. Anytime. Feel free to hit me up. Also,
thumbnail
go
is
gym.
wild.
Go gym, everyone. Appreciate it.
You do not look like that. You need to change your thumbnail.
Dude, it's the stupid. Okay, listen. Obviously, I do the AI stuff.
Yeah, but
for
AI
some
can make
reason,
you look like you.
yeah, but for some reason, it like pixelates me and wants to make me like 180p. I'm just like, every time I'm like, make me clear, and then it makes me some like pale. Like it's so annoying. I need to fix it. But yeah, it's ridiculous.
Go give Nate some love. Or you know, sort of watch list his account and make sure he changes his thumbnails, or else risk the unsubscribe. You know.
Appreciate it, man.
All right, love you, brother. Talk to you later.
Talk to you later. Peace.
Tanner is working a full 4 hours a day now. You guys don't get it, okay? I'm on for 4 hours. You know how full like Marshall's backlog is right now for stuff to do? And that's a separate, like, we are working a ton right now. But to be fair, I've never had more fun. So appreciate you guys all being here. Okay. Let's continue on. Who threatened Tanner to stream this much? It's not it's nothing like that. I just am having a ton of fun doing it. Can we go through some of Intel's earnings? This ended up happening yesterday after we were live. Mind you, we're going to have another guest on later today, so stick around or come back at about 2:45 is when we're going to have our next guest on. Let me double check that. It might be 2:30 or even 2:15. I don't even know when my guests are coming on. Jeez. 2:45 p.m. Eastern Standard Time. Okay. That said, Intel ended up blowing past earnings estimates. 12.3 billion was the estimate. They ended up putting up 13.6 billion. I think that was a beat of like, what was it? 20 something percent? No, sorry. Revenue beat by 12%. EPS beat by almost 120%. So huge freaking beats here for Intel. So there you go. Tanner does a 4-hour stream whenever he's low on cash. That's funny. That's funny. I am low on cash, but nothing like that. No, we're going to be doing this going forward. NVIDIA's like $240, and I'm like, guys, I'm taking the week off. No streams this week. That's hilarious. Oh my God, makes sense. It does not make sense. Don't start pushing that rumor. Someone's going to create some like vibe coded website based on the hours that I stream to try to calculate my cash position. It's like an inverse relationship. That's going to yield you no results. Okay, don't do that. Apple's up 3.5%. Holy, what a good day for Apple. Who is investing in Apple these days? Okay. Why don't you tell Amit you love him? I tell Amit I love him all the time. I tell Steve I love him all the time. I tell Matt I love him. I tell Roy. I tell Tevis. These are my boys. Opus 5 is already available in Notion, by the way. And you're going to start to see all these companies that come out and talk about how they're opening up availability for Opus 5. I'm so excited to see, like, it's my favorite thing whenever a model is released, to see the videos that come out and say, this is what I did on a single prompt, yada, yada, yada. It's only going to get better, right? Opus 5 is not the end. This is why I'm so bullish. I talk about AI way too much. I want to bring on people that are essentially like property investors and Airbnb. Like I want to expand my scope, but I just can't. It's a new story every day, like truly. And then whenever Opus 5 comes out, as it's come out today, and ChatGPT 6 comes out in the next little bit, you are going to have these moments where you're just constantly seeing like a large increase in overall amount of like agents and creating new workflows and helping solve new problems and finding new conjectures to disprove or something like this that we've seen from Opus 4.8 or Fable 5. Yeah, you can't. AI is taking over everything. There will be other investment opportunities. And I don't want to be blind to that as well. But I think that it's because of the mispricing that we're seeing, or that I believe in, that gets me so excited. You know, Google I wasn't talking about for a bit because we invested at 140 and then watched it climb all the way up to 300 and, you know, or even $400, I think at one point. And it's like, okay, well, that's like, we did it, you know, but now that they're showing off better and better earnings and now selling off, it's like, okay, I want to talk about this again because there might open up an investment opportunity. And I really like to talk about things that are not always sold off completely, but that I think that there's value there. I don't think that there's a point in me talking about things that I think have already won. That doesn't really yield anyone results. So we're always going to talk about where the fires are sort of being had, right? The firefighter doesn't talk about the, you know, every single home in the investment space. They talk about the one that's burning down or the one where, you know, there might be some opportunity there to go take advantage. Does your fiance know that you tell other men that you love them? Yeah. Yeah. You know what's wrong about this new generation? And I know I'm crazy to like, I'm not old enough to start being like, oh, this young generation. Is this term glaze is ridiculous. You need to glaze your friends sometimes. Like you show your friends some love and then everyone's like, oh, this guy's glazing. It's like, what? So you hate all your friends. Like the way to have strong friendships is you just go, oh man, you suck. It's time to pump up your friends, dude. It's time to tell people you love them. Bruh's making it weird. Bruh making it weird. I'm not making it weird. You guys need to go get yourself some friends. I love my friends. There you go. Okay. Let's go ahead and jump back in. Hims and hers down 12%. Wasn't this appreciating literally yesterday? Yeah, we had like a huge spike up to $35. Now it's back down to $28.80. What happened with Hims? Hims. Okay. Hims is getting wrecked. Up your friends and glaze them. You guys get what I'm trying to say. Don't do this to me. Okay? Just be be comfortable enough in your own skin to tell the people around you that you love them. Next decade down 9.1%. Cerebras down 8.8. CoreWeave down 8.3. Crazy that Cerebras is down so much right after that insane AMD announcement yesterday. That was a really, really big story. Sort of like an AMD plus Cerebras going hand in hand against the almighty NVIDIA. I thought it was an amazing story. I think Cerberus gets more out of that deal than AMD does. Okay, that was a big story for them. But they're down 9%, I guess. That's the moral of the story. CoreWeave having a wild ride here, going all the way down to $72, all the way back up to $86, back down to $74. The market does not know how to price these names right now. NBIS 203, $51 billion market cap. Poet down nearly 8%. Credo Technologies down 7.8%. SK Hynix also down 7.8%. Bloom Energy down 7.8%. Coherent, Rocket Lab, SanDisk, anything high beta right now getting absolutely killed. Is this a macro concern? Probably. Are these companies likely to continue to do well in the short term to midterm? Highly likely. Do these sell-offs create opportunities to get into better prices of the same companies that you liked, a couple days ago? Huber's Paul giving me $5. Stop glazing, bro. Why you giving me money like that? That's literally how the next Gen Alpha thinks. Like, bro, why you giving me money? All right. Appreciate you. Love you, Paul. The market is so stale. It's just because we're not seeing a true direction right now. Okay. Let's go check out CNBC, see if there's any new clips for the day. It's a Friday. It's a little bit slower. That's why it's going to be a guest-heavy episode. The next guest, by the way, has not been on the show for a very, very long time. We're talking years. Okay. Let's have a listen to this. Let me know if the audio is good. I can turn it up. Actually, I can do that probably now.
Also got a Federal Reserve meeting on Wednesday as well. And who knows exactly where the Iran war might be in just 5 days. Joining us right now to talk about all of it is Ellen Hazen, Chief Market Strategist and Portfolio Manager at FL Putnam Investment Management. Ellen, it's good to have you on the program again. We're not looking past today to next week, but right now, what are the most one or two important things on your radar?
Well, it's great to see you, Brian. Thanks for having me. So what we're looking at more than anything else is, number one, AI hyperscaler Capex, because that is still going up. And that is driving so much of the economy and so much of those earnings estimates right now. And number two, of course, the price of oil and the degree to which that flows through to higher gas prices at the pump, and then whether or not that ends up impacting the consumer. Hasn't happened too much yet, but those are the most important things we're watching. And of course, the way we monitor those, one way, is just through earnings estimate revisions.
And how have those come in so far?
Earnings have been great so far. We've had about a quarter of the S&P reporting. We've had 70% revenue beats, 80% earnings beats. It looks like the earnings are going to come in at over 20% year-over-year growth, which is also going to set us up for over 20% year-over-year growth for the full year. And even next year looks pretty solid as well. So far, so good. Still early days, but very happy with what we've seen so far.
You know, it's interesting because we've got three of your picks, and I love getting these stock picks. I kind of colloquially call it Opportunity Friday. Why not? Two of them are directly tied to the consumer. You've got Brinker International, ticker is EAT. Their main company is Chili's, the restaurant chain. And you've got Target as well. These are direct consumer names, which I believe should be impacted by consumer spending and the price of gas. You're obviously, at least not now, Ellen, not that worried.
I think that in fact, I would look at it the other way. There might be upside from here if oil comes down, if peace breaks out, if the hostilities decline, and if gas prices come down. So I think that we're already pricing in a little bit of hesitancy. But if you look, for example, at Brinker International, they're growing earnings solid double digits, maybe even as high as 20%, and it's trading for 15 times earnings. They're gaining market share. They're putting up over 6% comps. It's really hard to see how a stock like that doesn't work, and any lower gas prices would be a bonus. If we look at Target, they had 4 straight years of declining earnings estimates. But in the last 4 months, they've started to turn up again as the merchandising has really taken off, and you're seeing positive estimate revisions, very reasonably valued. And that's a franchise company that has a long history of management execution, and it looks as though they're exiting their long winter.
I want to go back to Brinker for a second. You said lower gas would sort of just be a bonus. So even with gas where it is right now, Ellen, doesn't sound like you're that concerned.
Of course, we all want lower gas prices. But right now, if you look at Chili's, right, that is a value casual dining opportunity for the consumer, and comps have been solid. And as you look at their record over the last several quarters, it's been beat and raise, beat and raise. The traffic is there, the ticket is there. And so, of course, we would rather see the consumer in even better shape than they are. Even in a neutral gas environment, they are executing. I think that bodes well for the stock.
Yeah, you know what? And McDonald's hitting like multi-year lows. You wonder if people are shifting to more the fast casual than fast food. We mentioned Target as well. I want to go on Target. No doubt gets a lot of its stuff from a rail company, a Union Pacific, another one of your picks. You think pricing power is finally back for a lot of these railroads? How come?
I'm just looking at the numbers, right? I'm looking at estimate revisions, and I'm looking at what companies are saying on their conference calls. And finally, pricing is turning around. So will it continue? Remains to be seen. But as we look at it, again, rail is very oligopolistic, generally good margins as long as you have pricing. I think the declines in coal volumes are long behind us at this point. So volume is okay and pricing is getting better. And of course, that drops straight to the bottom line.
Are we already in a, like, I know a lot of people have their opinions on if this is a bubble or not. Has the bubble already popped? Like, are we seeing this moment where all these companies that continue to see higher and higher earnings are just, like, their stocks are going down and we're going to see these extremely sold off rates? I don't know what justifies a bubble popping if you need, like, the companies to go bankrupt and to already go away. But I'm just curious, like, if we just go through the next 2 years, is this just going to stay similar where you have, you know, some of the Mag 7 trading for like 20 times PEs, 20 or less than 20 times forwards? And they're growing, but people are worried about free cash flow, so they're just not touching it. And what it really signifies is, like, where are these companies going to be in 5 years if we can just hold through this? It's a shakeout, definitely a bear market. Midterms. It's just weird because a lot of people are talking about rotating into other sectors, and I'm sure this is exactly what happened during the dot-coms, where people are saying, hey, there's still a lot of money to be made, and there's great profitability in the McDonald's of the world. And it's not that, you know, all these companies ended up decreasing in their growth like crazy. Amazon, was it their 1999? Here, wait, let's find that famous letter. Jeff Bezos 1999 shareholder letter. This was a very, very famous letter. Okay. I think this is the one. Almost certain. The first 4.5 years of our journey have yielded some amazing results. We're now serving over 17 million customers in 150 countries and built the leading global e-commerce brand and platform. In the coming years, we expect to benefit from continued adoption of online commerce around the world as millions of new consumers connect to the internet for the first time. As the online shopping experience continues to improve, consumer trust and confidence will increase, driving further adoption. Is this the one? I thought there was one where he talks about how much the stock has gotten hit. Maybe it was the 1997 shareholder letter. I forget, but In one of these letters, he talked about how the stock was down like 80+%, but yet, you know, it has grown so much. I'll try to find it. I'll do a little bit more research. But essentially, he talked about how the stock was getting hit, but the numbers just kept improving. And that the way people valued these companies completely changed. That, you know, people were paying for KPIs at one point, like the growth of the amount of users and the growth of the amount of sales and these sort of things. They weren't looking at free cash flow. And then in the next day, they are only caring about free cash flow. They don't care about growth and they don't care about timelines. I talked about this not long ago with SpaceX and how whenever companies look out 50 years, that can get really, really scary. But in the same breath, on the other side, some investors only look, you know, next quarter out. Well, they're going to have this problem next quarter, so this is a reason to sell this business. And that's also not fair. You know, it doesn't give you a great sight of where this company is going to be over time. Now, from my perspective, the way that I invest is I look for investors, or I look for companies, sorry. I'm the type of investor that, like, I want to find the next Amazon. I want to find the next Apple. And I don't always get in at the seed investing round or something like this. Sometimes I invest in those companies at very late stages, but that they have, you know, much more to go. You could have put money into NVIDIA at 500 billion. That seemed expensive. And, you know, then it 10x's. That's still a great return. And you did that, like, you know, 28 years after they were founded. You don't need to be there on the ground floor to find amazing returns. Buffett buying Apple. That was a great example. I think he bought that in like 2015, 2018. Yeah, exactly. The next Amazon might actually be Amazon. Maybe. Definitely not CoreWeave. I don't like your confidence in saying that. You don't know that. I think that there's things that you can look to CoreWeave and say they're the best in the world at doing this and other companies can't compete. And you could say that about no way a bookstore company can end up getting, you know, become one of the largest companies in the world. Well, it became not a bookstore company. We've already seen indications that CoreWeave is selling their software to other clouds. They sell their software called Sunk to other clouds because it's an unbelievable offering. And there's a potential that they could branch out into new business models. They're a data center rental company business. It's a glorified REIT with no moat. Brother, if they were, then you would see similar performances across other companies that set up GPUs, but you don't. Why is that? You know? It's like saying Palantir is a software company. Oh, they sell software just like any other software company. As to not break down why one company is charging a premium that other companies can't charge. Why is that? I would want you to look into it a little bit more. No, I know that you're not saying that they won't make money, but they make more money than their competitors. Why is that? Who's the next Lululemon? No idea. Amcor and NVIDIA signed a $1.5 billion agreement. Let's end up seeing some of the pieces here. Amcor and NVIDIA entered a multi-year strategic partnership. NVIDIA will provide a $1.5 billion prepayment to Amcor. I wish they would invest in these companies. I love the venture fund of NVIDIA. Funding support funding supports expansion of U.S. advanced semiconductor packaging capacity, which he literally, Jensen talked about how advanced packaging was at a shortage. He said that today. Partnership focuses on advanced packaging and test technology for AI. Companies will co-develop high-density interconnects and heterogeneous interconnection. Integration. Little dyslexia for you guys. Expansion is centered on Amcor's Arizona manufacturing campus. Partnership aims to strengthen a geographically diverse AI supply chain. Gosh, I'm done reading today. I'm cooked. They are, but they're certainly not going to be the next Amazon or even WIF or anything close to that. I'm smart enough to say I don't know. You don't know. I don't think that you could say that the bookstore company would be the biggest cloud services business in the world. How do you have any confidence in saying that? Yeah. Okay. Let's see what else is going on. Evercore is saying Apple will have an AI play. They do actually have some GB300s. They've got a couple data centers filled with NVIDIA products. Not much. Not nearly as much as the other companies. They're not spending hundreds of billions or anything like this. You know, maybe just a little bit to tease it. Let's have a listen.
Says they'll go much higher from here. Let's bring in Evercore ISI Senior Managing Director, Ahmed Daryanani. Ahmed, welcome back. Good to have you.
Thank you. Glad to be here.
It does sound like you think this demand-supply tailwind is quite durable.
Yeah, listen, Carl, we actually think the supply-demand imbalance that's out there in 2026 is going to get bigger in 27, not smaller, especially for the memory companies, right? If anything, I think it's going to start extending beyond memory to other parts of the ecosystem. And the simple reality is, as you move AI from training to inferencing, which is happening right now, memory is a bigger bottleneck in inferencing than it was in training. So we think the supply-demand imbalance gets bigger, which means these stocks all are going to prove to be much more durable, and to the extent investors can believe that more, you'll see these multiples keep grinding higher.
You think that this sort of, I guess it's been a bit of fear. We've heard from names like IBM and Starbucks, but this notion of having to have on-premises infrastructure, buying more hardware, less software, kind of reinvigorates what, the Dell and the Cisco trade?
Yeah, absolutely. Listen, I actually think to some degree what you're seeing right now is the decommoditization of the IT hardware stack, of the networking stack, right? It is a lot cheaper, I think, for enterprises to run open source models on-prem versus using frontier models for everything. And you know, to the extent companies start doing that, they have to repatriate data back on-premise, which means they have to buy compute, storage, networking, all that stuff. You've certainly seen Cisco, Dell re-rate on this narrative. We think storage is going to be next as a sector that will re-rate off this.
Ahmed, I'm sure you get this from clients, but everyone has a mental model in mind of when, the once boring network equipment suppliers become the exciting plays, and the companies paying them the money maybe lose their edge. It feels a little bit like, the internet build out boom, the broadband situation when it comes to Nortel and Lucent and all the rest. So how is it different? Is it different just in terms of what phase we're in of that process?
Yeah, it's a worry I have, in fairness, having watched Cisco hit the peak in the late 90s, right? What I'll say is there are a couple of things that are different fundamentally here. One is this boom so far is more driven by cash and equity versus debt infused. This is less about build and they'll come. This is, no, we need to build it because people are already coming here. At a very high level, it's as simple as IT has gone from being a cost center historically to becoming a place for you to generate ROI and better labor savings and productivity over time. And so I think there's a bunch of things that are different. But at the very highest level, I'll tell you, I think you're in the very, very early stages of starting this enterprise build out, which we think will have a couple of year cycle. And the metric to judge it on is not how much you're spending on IT, but really how much you're going to save on labor and productivity over time.
Different budgets. I'm curious, Amit, how you're looking at free cash flow with regard to the hyperscalers and the people who are spending money on chips. You know, we've seen it such that CapEx going higher bodes well for them. And I'm just curious, against that backdrop, as you start to see free cash flow going, kind of narrowing a little bit, does that suggest to you potential issues down the road with regard to, the CapEx expectations?
Yeah, it's a great question. And in fact, I think if you overlay it, you're seeing the transfer of free cash flow from the hyperscalers to the memory companies and the broader ecosystem, in fairness. But if you actually overlay it, on side by side, that's literally what's happened. Free cash has gone from the hyperscalers to memory guys off late. Listen, I think to some degree this can sustain. The part that we would be excited about is AI over time. It cannot just be a hyperscaler story. It has to become an enterprise, a sovereign story, which gives it better diversity as you go forward. So I think you do need that enterprise angle to come in a big way for this narrative to sustain. I would actually argue what IBM told you is to some degree what investors should be doing, which is buy more hardware and defer on software purchases right now.
Finally, Amit, you've got such an interesting coverage list. You cover Apple, and as we get closer to that, I wonder if sort of this Capex strategy, this second strike strategy that they're famous for, always have been, is really paying off this time.
So far it certainly has, right? I mean, Apple made a conscious decision, I'd argue, not because they wanted to be behind the game, but what they realized was foundational AI models were not an existential threat to them as they were perhaps to Google or Meta or others. And so they decided not to spend their money or their CapEx, or their money on GPUs and CapEx. They gave it back to shareholders. I do think Apple will have an AI play, and I actually think you and I as consumers will likely use AI on our iPhone, on our iOS devices, and Apple will collect a toll on it naturally, as they always do. And I think that's their model, which is they will be the way to monetize AI on the edge. They do not need to play on the foundational model side, just the way they did not need to play on the search engine side back in the day.
The only thing is with Apple's CapEx strategy is I remember this very specific thing. I recently listened to the Steve Jobs book, like the Walter Isaacson book on Steve Jobs' biography. And it talked about, I want to get the exact quote, but hardware companies require their own software. People who are serious about software should make their own hardware, is what he said. That's the exact quote. I'm curious if it's the other way around as well. In hardware, you can't build a computer that's twice as good as someone else's, but you can do it in software. That was during a Rolling Stones interview in 1994. My worry is that or not worry, but like I believe if Steve Jobs was still alive, that he might have a different strategy than Tim Cook. Now, Steve Jobs and Tim Cook were like this. And it's so cool to see that the person that's running that company has been with Steve for an extremely, extremely long period of time. He was actually the person that took over whenever Steve Jobs got sick. There's also a lot of stuff in that book talking about how, so in terms of the cancer that he had, it was extremely rare, but also extremely curable. But Steve Jobs was quite a hippie, and that he wanted to try to cure it with natural medicines and was warned against that by doctors constantly. And he had like friends of his in Silicon Valley that were like going over to his house and like screaming at him to get chemo. And he waited a very, very long time before that happened. So, you always say that like, billionaires have access to medicines, but Steve Jobs still died. Steve Jobs actually declined a lot of the advice that was given to him by his amazing doctors. So a little bit crazy there. But I believe if Steve Jobs was still alive, that he would likely try to build out his own software solution because it's going to work better with the hardware. Working with OpenAI and Gemini and Anthropic and all of these things is a little bit counterintuitive to some of his quotes that he had told in that 1994 interview. So I don't know. I think it's working out for them well right now in terms of the valuation of the company and just looking at the Capex story. But the Capex story does not tell you who is going to be the winners and losers of tomorrow. And that's what I'm trying to figure out. You know, I don't think investing is purely based on great products. I don't think that that's true. I use Wise all the time. I think Wise is not a good stock. I think that they care so much about their customers that they don't take a high enough margin. And I use the products because boy, oh boy, is it a great offer for a small business. But I don't think it's great business for them. And in the same respect, if you go and you look for the companies with the highest margins and the best free cash flow, it doesn't always necessarily mean that they can charge those rates for a long period of time. I would look to PayPal or something like this. PayPal charges higher than most of the other payment providers, and it's really because they own the full stack. They've got a major merchant side business, merchant-facing business, and they also have a major consumer side facing business. 400 million users on one side, 35 million merchants on the other side. That dual-sided commerce leads to insane margins. But they're being attacked by Apple and Stripe and Google Pay and Cash App and all of these companies that are essentially creating these direct payment buttons like Pay with Apple Pay, Pay with Google Pay, Pay with Cash App, Pay with all these different services, and they don't even have to run through PayPal, yet you still have an encrypted service using your credit cards and these sort of things with an additional security layer. All of your stuff is already with your bank or solution or under one sort of payment feed. Everything that you would want from PayPal being offered by companies and services that charge much lower rates and can give back to consumers in forms of cash back or something like this that PayPal obviously does not want to do, or else it would lower their margins. So investing's a hard game. You know, you have to not only pick the winners of today, but then you need to make sure that they're the winners of tomorrow. And you don't know where how the world is going to turn out. So you do have to make some predictions there for sure. I don't know where Apple's going to be next. I'm biased because I don't use their products. I'm an Android guy. But obviously their ecosystem is extremely strong, and they do have the free cash flow and the profitability right now and all of that stuff, as long as they can continue to have that hardware and software advantage. But we'll see. Tesla at 308. Tesla's killing me. Let's take a look at Tesla. I want to do a little... So I don't do this often. I usually do a lot of the research behind the scenes and then end up talking to you guys about it on stream. So I'm not prepping a video here or anything like that. I just want to go through and look at Tesla's numbers because we weren't able to see the stream or the slide decks whenever the numbers came out because we were listening to Google's call and then it went directly into Tesla's call. But let's make this a little bit involved with the chat and everything. Let me know what some of the highlights were to talk about Tesla and what was so good and what was so bad. But we're going to go through Fiscal AI and some of these other tools to try to find out how this company did. Because when companies sell off, that's when I get interested. Not that I have the cash to take advantage of it, but there's always possibilities to trim something that I don't think is going to be as advantageous as Tesla, if that's what it looks like it's going to be. Now, I don't think that's today, but maybe in the 200s, maybe that's interesting. Maybe mid 200s, maybe we can get this even lower. It's not like we haven't seen, cheap prices in Tesla very recently. March of 2025, this company was $214 at its low. What do you think? Okay. Revenue for Tesla increased by 25.5% year over year, the fastest growth rate that we've seen in the last 3 or so years. Not since June of 2023. Okay, so it's literally just the cutoff right there, which is a new high for Tesla. Let me make this a little bit bigger. Okay. Gross margins on Tesla, 16.8%. Does this usually happen in Q2? Not really. There's not really a trend, but we have seen some large drop-offs in their margins. Why is that? I assume there might be a little bit of a different margin profile on the Model 3s and Model Ys versus the larger S and X, which now are coming off. Has that started already? I don't follow Tesla too much these days. Potentially my next guest, by the way, which is coming on at 2:45, can tell us a lot more about Tesla. But yeah, so other model productions, 8,800 versus the 13,000, these sort of things. I think the Fremont facility is going to be used for more of the Optimus production going forward. That, I think, is the hope. Okay. Let's see. How did they beat on the top and bottom line? Or how did they do? Okay, I remember this. Revenue was $28.24 billion. Versus revenue expectations of $25 billion. It beat by almost 12%. It's a huge beat on revenue. But EPS actually fell below expectations, 25% miss. And I'm actually, if I remember correctly, a large portion of that was also their share of SpaceX. Now, some people like to write that off as if it's not real for some reason, but they do have shares in SpaceX, and SpaceX has appreciated a ton since that IPO. If you ended up getting in some of their previous rounds, 400 billion, 800 billion, then obviously at, what is it now? Are we at 1.5 trillion right now? 1.49 trillion. That was pretty dang close for my guess. Okay, so then that share of SpaceX likely to do very well there. What else? Are they diluting shares still? Free cash flow. Negative free cash flow, about $1 billion. I think that also had to do with some of their comments about being a little bit longer to get Optimus fully working. They said it's like going to be by far the hardest manufacturing problem in human history. Which, I mean, that's probably extremely likely, right? Like, what else is harder to create than humanoid robots for general purpose use, both commercial and consumer use cases? It's a lot of training. It's a lot of data centers. That's a lot. Like, every single part is a brand new part. You can't look to old Ford models or something like this and say, okay, well, that's how they do their painting and stuff like this. Everything's new. Okay. Is CoreWeave selling off right now? Still? CoreWeave, new low of the day, 73.66. I still like this name. It can sell off in the short term. I'll like it for a while. Bloom Energy. Honestly, I think just a lot of these high beta AI names are selling off. I'm just surprised that some of these names, like the Bloom Energies, like the Lumentums, or like the Microns and stuff, they're going to be the beneficiaries of a lot of this additional spend. So I'm surprised that both are selling down on the idea that Google or something like this, or what we're going to see likely from Microsoft and Amazon increasing CapEx, is going to be beneficial to those companies. Lumentum came out and said Google is one of their largest customers ever. If you end up increasing that rate to, let's say 200 billion this year, potentially 300 billion, or some analysts have it as high as 375 billion for next year, that's going to be a lot more networking revenue. That's going to be a lot more NVIDIA chips. That's going to be a lot more components and transistors and a lot more energy. It's because the company is trash. Well, I mean, that's one way to put it, but it's certainly not the truth. You can look at, I'm not saying that, a company like CoreWeave is not high risk. Okay. It is. They take on debt. There's a possibility that if a company has a lot of debt and some of its variable rates, like secured overnight financing rates, that interest rates can go up, and the unit economics of what they expected on that debt is not what they actually ended up seeing, and things got way worse. And then they have to potentially unwind a lot of the GPUs and the debt that they ended up purchasing. That's like the major bear case in which CoreWeave deserves to fall lower. But let's look at the facts. I think their estimate for growth is we are doing $2 billion a quarter right now, which is like up 111% from where we were previously. And that is going to climb up to over 5 billion a year from now. So if you can get debt because that customers like Anthropic and OpenAI and Meta and potentially Google just said they're going to use third-party providers. You don't think that includes CoreWeave? They're by far the biggest player in the NeoCloud side in terms of, like, Google's not going to AWS. AWS has enough capacity. But CoreWeave is not looking to be their own cloud. They are offering bare metal, essentially saying to the companies that need direct compute, or to companies that want that sort of bridging strategy, like a Meta or a Microsoft or these sort of businesses, hey, pay us for our compute today. Let's sign a 5-year deal, and we will be that bridging strategy for you. Tanner, what's your CoreWeave average? I'd have to check. It's higher than where we are today. It's probably like $91 if I had to guess. I'd have to check. I've purchased at like 105. I've purchased a bunch in the sort of 80s range. But $74, this is like near the bottom of where we are recently since I've been looking at this company. Look at Elon's tweet. Elon just tweeted? Okay, that's a good one. Elon just tweeted, former trillionaire. That's a great one, Alex. Thanks for sharing that. You think his life is any different? Okay. CoreWeave deals aren't just instantly announced. They're in the works long beforehand. Yeah, of course. CoreWeave's hardest problem, the problem that they have to figure out is, how do you get capacity on fast enough? If Google's struggling with it, CoreWeave is also going to struggle with it. And they don't have the cash pie or the cash flow from other businesses to help fund it. The GPUs that they've sold last year obviously are bringing in real revenue. They just brought in $2 billion. That is going to help fund new GPUs, right? But they have payment plans on a lot of these things. Like, so you have the financing and the interest expenses, and they've done all the math in order to make sure that it's still profitable going forward. And they've been able to almost every single quarter bring their interest rate. Their interest expenses have gone up because they've done more. They've gotten more debt, but their average interest rate that they're paying, the coupon rate that they're paying on all that interest or debt that they're taking out has gone down. Okay. So their margins improve over time. Do you own Google and Amazon? Yes, both. I've got 4 of the major like big tech companies. So Amazon, Microsoft, Meta, and Google. And then obviously NVIDIA, but I don't really put them in the same boat as like the big tech names. They're, you know, by far the biggest semi name, but they don't have their own cloud. They don't have their own, I mean, they do have software sales, but I mean, the big part of their sales is hardware, of course. Don't look at NBIS right now. It's all like bad macros come and go. We're going to see times where, you know, NBIS and CoreWeave and many of these companies are questioned. And I think the another scary part for Google and like why these companies are also selling off is like the operating margin on Google has increased. So we could just take a look at Google. Let's go here. Google Cloud operating revenue, and then we'll also add in their margin here. Google Cloud operating margin. So we're holding up roughly a 35.6% operating margin. A lot of this compute is offered directly from Google, home built, homegrown. As they use more of the services that they're paying for SpaceX obviously will offer them GPUs, but they want a cut too. So the more and more people in the supply chain that you're offering a cut to, another middleman, that margin will be impacted. And Google specifically said, hey, in the short term, not only are we going to grow, we want that growth rate to increase even faster. So 82%, you know, maybe we can do even more. The new ARR that they just added on last quarter was about like $18 billion, essentially the amount of new revenue times by 4, right? Because these customers are long-term agreements. There is some spend in the cloud that is for testing and these sort of things. They just want to get a feel for it, but that's not all of it. A lot of these people are setting up, you know, AI processes and workflows that will continue in perpetuity. And yes, token costs might go down, but then you're going to find new ways to end up spending that. The same way that cloud has grown for the last, you know, decade plus constantly is because there's going to be new businesses that find new solutions to problems using artificial intelligence. And that'll keep the recurring or, you know, 100+ net dollar retentions and people come back and sign contracts that spend more and more every year. That's been a consistent. Tanner, explain your understanding of neoclouds. I don't think you understand them. What do you mean, explain my understanding of neoclouds? So I honestly think that most people truly do not understand neoclouds. I appreciate you testing me on my knowledge, but the truth is that there's huge differences in neoclouds. So just your question is dumb as ever. If you're to compare CoreWeave and NBIS, they solve 2 completely different problems. Okay. So whenever you're talking about CoreWeave, they sell what's, you know, commonly referred to as bare metal. It essentially means we have GPUs that we want to sell. We're not putting necessarily virtual machines on and splitting the GPUs into multiple different customers. What we're going to do is sell large swaths of GPUs that are there to essentially generate tokens or train new models. So inference versus training. And then we're going to service customers that are going to pay us 5-year-long deals to run our computers. We're setting up big computers over long agreements in cluster sizes, meaning multiple GPUs all tied together. NBIS, on the other hand, can sell a, you know, GB300 NVL72 and split it up into multiple different tiny customers that are there buying hour-long run rates. Like, I want to train this new model and I want to use your model or I want to use your GPU for about a week and a half. That should be able to get us through, what we need to do for our AI workload. So the idea that you say neo clouds in general is not remotely accurate enough to just say, hey, explain what a neo cloud is. Neocloud, by the way, is just a random term. Same with hyperscaler. But for the most part, the way that people use those terms to break up the different customers is, are you selling this as a full stack solution? And are you greater than 1 gigawatt worth of size? That's for the most part how they break out these two different customers. Neoclouds can be used just as inference as a service. NBIS can be used for AI workloads for, very, very small customers at hourly rates. But they're not really of scale. They haven't really reached that, gigawatt plus scale right now of active power. So appreciate you testing me. Mods, get that guy. No, I'm kidding. All right. Have you bought NBIS recently? Yes, very recently, like a couple days ago. But I'm running out of cash. I like all the dips I'm seeing, and I'm buying them all. Hyperscalers increase spending, semis tank. Hyperscalers reduce spending, semis tank. Oil goes up, semis tank. Oil goes down, semis tank. It's true. But then you also see these moments where NVIDIA can go from 120 up to 200, and it's like the market just sees an appreciation. They just look back on this company, and sometimes that happens, I don't know, pre-earnings, as a lot of new analysts come out, re-look at businesses, send out their findings to institutional customers, and institutions go, oh my God, there's a huge opportunity here in NVIDIA. It's not like they've gone all down. I mean, in the short term, if you were to look at semis, you'd sort of be blinded by what has happened over the last 2 years. AMD, Broadcom, NVIDIA, all of these companies have been some of the greatest success stories ever. So in these moments, whenever you have a 2-year hyper bull market in a specific sector, it's okay for the market to be able to question whether or not that this should continue at this pace. I think Micron's a little cheap here, okay? But we've still gone from, whenever I bought it at like 370 to now, it's been months. And we're, getting close to a 3x, 2 point something X. So it's okay. Got to look out. And if you're saying, hey, I bought everything at highs, I didn't get in as early as you. Well, I mean, dude, if you were investing back then you didn't pull the trigger. It's because you're waiting for the market to tell you it's okay to invest in. You're not getting that upside. You need to take some risks. I'm not saying increase your risk profile. It's just like, don't act like an AI investor whenever you should be like a dividend investor or something. Tanner has a venue for the Toronto meetup been picked. Yeah, the venue's been picked for a long time, but we made it public and we sent out that email to everyone that signed up. Even if you sign up today, you can see all the previous email blasts and everything. But yeah, the venue is picked. It's in the downtown core of Toronto. We also have hotel recommendations and everything on the site as well. All right. You want us to gamble? Well, I mean, dude, investing is not a guarantee. You're going to have to take some risks in order to see outsized returns. Even betting on the S&P 500 doesn't guarantee you a win. But if you want market rates or market performance, then buy the S&P 500. I wish I could go, but I'm banned in Toronto. Maybe I'll see you down here in Texas. Honestly, stay in Texas, brother. If you're banned in Canada, I don't want to know why. Stay there. Banned in Canada. Got like felons in chat being like, bro, I wish I could make it. My wife banned me. Ah, okay. All right. All right. I thought you meant like legitimately. Tanner, do you think that they punish Microsoft and Amazon like they did Google for CapEx spend? Likely. And I think that that's why you're already seeing, like on Google's numbers, the next day Amazon and Microsoft were red. Because I think people are going to see increased CapEx. We've already seen this. Like Microsoft said that they're doubling their capacity. They're doing some 2 gigawatt build out in Pecos, Texas or something like this. Sorry, I say something like this way too often, but they're telling you. You could follow these build outs constantly. There's not a background check to go to the meetup, is there? No. Dylan, we all know you're reformed. You're allowed to come. It's fine. My only hope for Microsoft is that it's already been beaten down so much. Microsoft is down. It's funny. It's an AI build out, like CapEx name. It's also a software name. The market gets to decide. I'm excited to talk to our guest about their thoughts on some of these names. Okay. That'll be in about 10 minutes or so. Okay. Data center, who wrote this? Who wrote this article? Bloomberg. PGM interconnection says data center demand will reach 194 gigawatts by 2035. Bloomberg ended up forwarding this. Let's have a read. We need more power. Data center demand in the U.S. is projected to surge 253% from 2026 levels to a record 194 gigawatts by 2035. 1 gigawatt is roughly the equivalent capacity of a single traditional nuclear reactor. As a result, data centers are expected to account for 20% of electricity consumption by 2035, up from 6% today. Wow. To put that into perspective, data centers are estimated to consume 12% of U.S. electricity by 2030. Much of this growth is concentrated in a handful of grid regions, such as PGM, which serves the District of Columbia in 13 states, including Virginia, Pennsylvania, and Ohio. Electricity is the next AI bottleneck. Uh-oh. Okay. Is the market still selling off? Oh, gosh. Dude, look at the NASDAQ right now. Oh, my. Brother, I see you in the background. Are you ready to go? We can start early if you want. Okay, perfect. Well, ladies and gentlemen, joining me here today has been a long-term friend of mine. Hasn't been on the channel in a while as he started streaming full time as well. But this dude has made a fortune in the stock market. And I can't wait to get his take because I have not heard from him in a bit. Not because of him or anything. He's been trying to stay, close for a while. But ladies and gentlemen, welcome the great and powerful Jesse, micro to macro.
Hey, what's up, brother? How you doing? Can you hear me?
Yeah, I can hear you perfectly.
Awesome. Yeah, I made a fortune. I lost a fortune. I've made a decent amount of it back.
There you go.
You got to cut your teeth in the markets, I think, every once in a while. So I learned not to be like 60% in options in October of last year, especially
Got you.
especially in crypto. Missed the gold rally, missed most of the AI rally, but I probably got into Micron right around you, so that helped a lot. But yeah. It's been one of those things where I don't know. I've learned a lot of lessons probably in the last 9 months, I think. Very humbling ones, which have been powerful for me.
Yeah. The options, man, they are volatile. I never really was in it, but
that's probably pretty smart of you, honestly.
it's the highs have never been super high, but the lows are also like super negated as well.
And you don't get it right for timing and you're fucked. I don't even know how. Sorry, I'm going to try not to cuss too much in your stream, Tanner.
Appreciate it.
Yeah, I'll try. No promises. But it's the people that do 0 day. I don't know how they do it. I don't know how they keep their sanity and their emotions in check. For me, I made most of my money off of options. So I went from like we've talked about before, when I retired 6 years ago, I had like 300,000 in cash. Figured out how to sustain myself, my family, my parents, my brother, like a bunch of people, and turn that into $6 million, a little bit more than that, and then dropped it down to like under 2.
You still got the dream home?
No, I didn't buy it. Thank God. I backed out of it, and that was the smart thing to do because it allowed me to be able to build that back up again. And so now I'm closer to 3. But I was looking at a really nice home. So glad I didn't buy it. It's just one of those things. I was looking at Lambos too, and I'm glad I didn't pick up one of those either. But yeah, I learned a ton of lessons. The house I was looking at was actually 1.15 million. Today, I think it's going for 950. I think I could talk them into 900. I actually had to pay a $10,000 deposit to them for backing out of that. I was so close to buying it.
Yeah.
But I don't know. It's $250,000 cheaper today.
Yeah, no, it's it'd be worth the 10 grand for sure.
Yeah, right. So you live and you learn. But yeah, I've learned a lot over time, and hopefully I can provide some value to your stream here. What kind of questions you got for me, brother?
Dude, I want to know what you're looking into these days. I mean,
yeah,
the market's changing constantly, and sometimes what we think is going to be rewarded is not being rewarded in the markets right now.
Sure.
What are you focused on?
That's a good question. I'm actually,
big one.
I very much believe in the AI trade still. And don't get me wrong. Like, I think it's gonna have a breather. I think maybe it has like one more big leg in it, between now and the end of the year. And then I think it could roll over, because everything does. Like, everybody that was excited about gold and silver at the end of the year, beginning of the year, I don't know how many people told me, oh dude, it's only 37 trillion. It can 10x from here. It can go to a 370 trillion. Just give it a week. And those numbers weren't very realistic. Those people didn't do very good. People that bought into IREN at the beginning of the year, they're probably flat to down right now. There's always things that will get beat up, but I do believe my main focus right now is memory. I think it's great. There's a guy I follow called Trade Whisperer. You might see some of his posts on X.
Oh yeah.
He's brilliant. He rode that thing really well. And I just think that and a forward PE is tough because the E can always change. The earnings can always change. But I think that Micron, when you're sitting at like a 5 and a 6 forward PE for a while there, I think in the lows, it was like 3. I think, and you have growth rates that are just obscene. I think you can make a lot of money from that. I also think just cyclically based upon normal timing that I think Bitcoin's coming back. Normally it bottoms in October, but maybe it takes longer. Maybe it takes less time. I really don't give a shit anymore. Sorry about that. I am focused on more long-term vision. I think like 10% of my portfolio is in options right now. I haven't bought anything in like 9 months for options contracts. I'm really just focused on what's going to happen a year or two from now. And I'm stoked about the AI space. I think people are undervaluing it. I don't think they realize. I don't think they use it. All these analysts that I hear that still are like doomers about it, they don't use AI and they don't know what it's capable of, and they don't know how much it can increase productivity. And I think they're going to be very foolish in the end. Even people like Michael Burry's crushing it today, by the way.
Yeah,
but
it's a good day for him.
I think if if he's smart, he'll take his gains and he'll step away. And I don't right now. I mean, the bond market yields look a little scary on the 10-year, the 30-year, and we're like the good market around the world. Parts of Europe and other areas are just really getting crushed. So I'm a little worried about bond volatility right now. The MOVE index, which is like the VIX for bonds, it shows a lot of pain. So, or at least it's starting to. It's jumped very, very quick. It's up like 5% today.
Yeah.
And
wow.
I think that's the key thing that's hurting markets today, at least, because the dollar isn't up. Oil's down. It's like between 88 and 80 or 89, but it was like 96 yesterday. So I think the macro, the geopolitical macro is what's really impacting us right now. I think the people don't even talk about Ukraine and Russia anymore, but there's this company called Wildberries. It's the Amazon of Russia. Ukraine has hit 6 of their major distribution centers, and these would be like the equivalent of the biggest facilities that Amazon has in this country. And they burnt them to the ground. It looks like an apocalypse when you look at the videos of it. And so that war has dramatically escalated. They've got lines where people are waiting just to get gas. They've got people sticking up gas trucks with guns so they can steal them and get gas. And that goes in and out. I think it's a little bit better now, but that's escalated in a major way. The attack, Ukraine just initiated an attack today. That's the biggest one they've ever done.
Really?
So yeah, so there's that. And then there's the Iran war.
Yeah.
And both of these things are like incredibly pivotal, I think, for the macro right now. Because I've always believed that and I got too caught up in the top of the pyramid, but I've always believed that it's macro, which can very much be affected by geopolitical. And then it's like fundamentals of what you're invested in. Then it's like the quarterly financials and that kind of stuff. And then it's the technicals. And I don't know, the macro is dominating right now all around the world. So it's going to be a fun short-term period of time. But I think Russia's almost done with the war. I mean, they met with Marco Rubio yesterday. For the first time in a year, the U.S. sat down with Russia to talk about an end to the war. And Iran, I mean, that thing's just a clusterfuck. But when you look at it, like today, there was an announcement from the Wall Street Journal talking about how Kuwait, Bahrain, and Saudi Arabia secretly worked on attacks against Iran over like the last month. And so you're seeing all these countries rerouting. We signed huge deals with Iraq in regard to like oil contracts and building out a pipeline within their country and doing a bunch of work there. You've got Kuwait that could join the Abraham Accords, and the Abraham Accords are like, it's basically the Jews and the Arabs becoming friends again, or at least doing business, even if they hate each other. And so you've got the potential of them doing that. You've got Saudi Arabia. A deal was just talked about. I think Trump said something yesterday where if they join the Abraham Accords and a few other caveats, that will give them access to nuclear energy and sign a contract with them. So I don't know. There's so many things going on. I think that's going to dominate over the next couple of months, and I'm very interested to see where it goes. But so long term, I'm looking, and I don't even think I answered your question. Long term, though, I'm looking towards like memory. I'm looking towards like Bitcoin type investments, and a few other things.
Yeah. If the macro, which I'm saying, if the macro, I know that what you're saying is true. The macro is the tide that controls. Like, we can decide which company goes up or down, but the macro is the ocean. You can decide what boat you're on.
Yeah. True.
That being said, though, is memory the defensive place that you want to be in if you believe that the macro is souring, or how do you play defensively here?
So that's a good question. It's a really good question. I don't think the macro is souring, so I've got a heavy bias towards that.
Okay.
I don't have a MAGA hat on, but I was a liberal my entire life. I voted for Obama and Biden, and more recently here I like Trump. So just so people know where my bias is, but I do believe things are getting a lot better. We just had a number, and maybe I could share my screen real quick here.
Yeah.
don't even know how this shit works anymore, bro. Let me see, video file, share screen. Okay. Let's see that. No, I don't want the whole
You're
screen.
making me look like I'm on legacy tech. We used to use this all the time.
Dude, it's been a while for me, bro. Let me see here real quick. How do I do just like with this? Can I do just like a screen, just a browser window?
A specific tab. So
Okay.
if you're on a different browser, I just had this with another person. If you're on a different browser, sometimes it messes up. I assume you're not on Chrome.
No, I think I'm on Brave, which is kind of like that,
Yeah,
but
I
like
know.
a bastard version of it.
Then I don't know if there's been a lot of weird things with that if you're not
Okay.
on Chrome.
Well, next time I'll get it switched over so that works better. But I could just tell it to you too.
Do you want to send me the link? Maybe I
yeah,
can throw
yeah.
it up.
Let me do that. I'll send you a link to this post. I think it's shared. And then you can pull it up. That works better. All right, let me see. Just pop in chat. Yeah, sorry, I just do my OBS stuff all the time. So there you go. You should have it in chat. But I was going to say, like, we've got amazing things that are happening right now in the U.S. economy. Not every economy is really great right now. And I think that's actually incredibly beneficial for us, too. China has been going through, I think, deflation. Other people will say disinflation. Their housing economy has been a train wreck for 10 years. Their stock market is at the same levels it was in 2007. A bunch of poor Chinese people just bought massive amounts of silver and gold because they don't know where to put their money. And that just went down a ton. And their bond yields give you like 1.5%. And they've been getting gobbled up, but like who would invest in a bond yield that gives you 1.5% unless your economy is just real trash and not doing well? I actually have this thesis, and I've had it probably for the last couple of years, and it seems to becoming a lot closer to true, is that deflation out of China can disrupt and offset inflation in the United States and other parts of the world. And I think that's what we've been seeing, because like last year, everybody freaked out around tariffs. I didn't. I still didn't manage my account well during that time. So I can't act perfect about that. But like, I knew tariffs wouldn't cause inflation. I'm a student of history, or at least took the time to go back and research the 30s and look at like all the tariff program that was initiated back then and everything that we did to create the Great Depression, because I'm like, I don't want to be in the Great Depression, especially with a bunch of options contracts. And I learned we weren't in that. And the way we were wielding that tool, and sorry, I'm probably going too deep, but the way we were wielding
I was trying to get your thing up, but it's paywall blocked, and then I tried paying for the paywall, and now it's asking me to put in my credit card, and I'm like, oh.
So I'm forcing a subscription, my subscription service on you. That's cool.
No,
let me do this. Let me do this.
$7. I mean,
that one's better. That's
affordable.
This is straight from Lisa Abramovich. She's awesome, but that one should work. She doesn't charge people, so that should be better. But no, I was going to say, like, the tariff war, everybody thought it was going to be inflationary. It wasn't. It was the exact opposite of that, because a lot of people seem to forget about something called supply and demand. And if things cost a lot and you're buying them from China, but it's cheap shit you don't need. Now, there's some things you do need. They've got a lot of resources. They've got benefits. They have massive amounts of energy. They've got good elements that are way ahead of us. But a lot of the stuff we buy is crap, and you could get it from anywhere. And the tariffs just made it to where you could buy that from America for cheaper. And so I don't think people realized what actually causes inflation, but I'm very much like in the Art Laffer court. He was an economics advisor for Ronald Reagan back in the day before we had our big booms in the 80s. And they were all about deregulation. We've done that. They were about lowering tax bills on people. We've done that more recently with the big, beautiful bill last year where, Social Security is down for taxes, and waitresses are paying less, all this kind of stuff, overtime, that kind of stuff. And you want to grow the actual economy. You don't want to do helicopter money. You don't want to do the stuff that we did, after the pandemic, where it's like, hey, let's shut this bitch down and then just print 40% of the money that's ever existed in this country's history and do it over a period of a couple of years. And then just see, if things get more expensive. I think that was the key. I think it's always the key of inflation. It's the helicopter money, because then all of a sudden you have this crazy, if everybody's got more money and they're locked in their house, what are they going to do? They're going to buy like Chinese crap. And that's what we did. And so China looked great. And then people started going outside, and then China didn't look as good anymore. And I think those kind of things, I think that it's the helicopter money that leads to inflation. I don't think it's things like tariffs, especially if they're wielded in a way to make it to where you have better trade deals with the people around you. So I don't remember what our topic was anymore, but I do. Sorry.
I got
a lot of stuff to get out. We haven't talked in a while, but I think we're headed down the right path. And like that link I gave you, did that new one work?
Yeah. I threw it up.
Okay. If you got it up. So this is
this
US
slide that you want?
Yeah. So this is US initial jobless claims. And this is just like one interesting metric, but it's a pretty cool one. So, and I'll kind of talk. What was my little statement that I made here? So I did a post, and I'll just kind of read it to you what my post was adding on to this. I said, this is completely against the narrative being pushed by people like Dario, the CEO of Anthropic, and many AI doomers. I don't consider them to be the same, but he does seem to preach a lot of doomer stuff sometimes. But why are we at the lowest number of initial jobless claims, unemployment claims, since 1969? If we're at a time where AI is going to destroy human labor. And I'm not saying that it can't take from it, but I do agree with a lot of people that I think are really smart in the tech space. You know, David Sachs is probably like one of them, but there's a ton of them. Brad Gerster, like there's a ton of them, that we're likely to see more job creation than less because of AI. Eventually, I don't think we'll need jobs, but I don't want to go there because that'll just get on a long rant. But I think it's hard to make the case that AI is destroying our economy when we're at the lowest levels in like almost 60 years for unemployment claims being filed. And that could be a number of things. It doesn't just have to be like, oh, AI is building jobs. It could be, I mean, we're deporting a bunch of illegal immigrants too. Like you got a smaller job pool, right? So if you have less people to compete for jobs, you're probably keeping unemployment down. So it's a lot of different things. But I think the combination of like tariffs, drawing business back here, massive incentives, people undervalue this. But when you can fully depreciate the Micron facility that you're building, the Hynix facility that you're building, and you can write off those taxes for however long it takes, that's along with the tariffs, along with everything else, you create a massive incentive for growth. And I think that we're headed down that path economically. And I think people they get too caught up in their own politics. And again, I've told people what my bias is. Everybody has bias. They can either admit it or not, but you can't use that when you're investing. You have to look at data. And I think people think I don't do that, but I do. And anyway, that's some of my.
I definitely think you're data focused. The only thing is that I saw that jobless claim thing, and I'm not even disagreeing with you, by the way. I'm not an AI doomer. I think that it leads to prosperity. I think that open models and all of these things will give super tools to the average person. It levels the playing field, so you don't have models that are exclusive to billionaires or something like this. I think it's good for people.
Sure.
In the next breath, though, I don't know if you saw this one as well. I think this was an Indeed posting thing, which ended up seeing job postings end up falling year over year.
Yeah, I've heard that. I've heard that argument, and I think I even spoke to that in my post. Let me see. I think I had it in here somewhere. It said, my advice: don't listen to the doomers or people who are trying to push, their own products or narratives by telling you how. No, wait, that's not it. Okay, right up here. Why? In the bear case, which is what you're bringing up right now, there's the excuse of we're in a low fire, low hire environment, and there's not a lot of job postings on sites like Indeed. There is actually some trading economic data that shows some of that going up, not Indeed data, but other data. I do think we're in a low fire, low hire environment. I think that can be true. We have record unemployment. People had previously said that we're basically fully employed at these numbers, but we've got incredibly low, almost 60-year initial jobless claims. We do have lower job postings. We aren't firing a lot of people. People aren't hiring a lot of people, but I think part of that is just timing. In the 80s, when Art Laffer convinced, Ronald Reagan to don't raise taxes, lower them, push pro-growth policies, do everything you can to grow your economy. there's a lag time. It doesn't happen immediately.
Yeah.
So like
Yeah.
you can't, like, things just don't work that way. It's like turning a, freighter around in the ocean. It's like, it's going to take a few minutes. And so I think that a lot of these policies, even though they were incorporated last year, I think there was so much noise about the tariffs and all these different countries fighting with each other and whatever political side you're on. But I think there was so much about that. People were waiting to see how it played out before they really said, okay, should we take advantage of a lot of these builds? And in some cases, they did start building, but it doesn't matter because it takes like 2 fucking years to build out these facilities. So if we look at construction jobs, you'll see that they've been massive. And so I think that construction is the first part. Did you beat me?
Yeah.
I missed that for a second. The construction's the first part, though. Everybody starts building first, and then you can't hire people until you actually have a building to put them in. And we see on these posts, all these new buildings, all these posts about another location being built all over the place.
Yeah.
But again, like when there's a 3-year turnaround, if you do a good job on building a memory, fab place.
If you do a good job, like sometimes longer,
Yeah. So,
Yeah.
I mean, it can take even longer, especially with politics, especially if regulation is messy.
Yeah.
So I just think people have to be patient, and I feel bad if there's a lot of people in options right now. I feel bad for you. I've been there. I lost like 65-70% of my portfolio and then had to make it back. So I get it, but you just have to understand that I think what you're doing is very wise. I think staying out of options is a good thing, because later on, if like we get a 2022 event, the end of 2022, that's where I made all my money, man. I made over 600% in 2023. I realize nowadays people can do that with a stock you've never heard of in like a Thursday. But for me back then, it was like really cool. And I made that money because I bought options at the very low of the market.
Yeah.
And I knew it was the low. I was getting like Meta at 85, Tesla at 100, Palantir at 7. Oh, I wish I wouldn't have sold my fucking leaves on Palantir at 7, bro. I had 2 years left on them. I would have made so much money if I just spent more time hanging out with Amit. Don't tell him I said that. But you make mistakes with things, but like that's when opportunity affords you. If the world falls apart and you were smart enough to hold stock and you've only lost 50% of your portfolio and we start getting near a bottom, you will have options. The people that are in 0 days will not. They'll be done. Their game will be over. So I don't know. I think my view on how to invest has gotten a lot more modest, and I've been humbled enough over the last year that it was probably like the best thing that could have ever happened to me. I'm not worried about Lambos anymore. Frankly, man, you can get to $6 million. And I was over at one point, and I don't count that day because it shifted by $1 million in a day. And I don't think I can count that, but I got to 7, but like, it doesn't matter. The money doesn't matter. Your time, you're like enjoying your life. And I don't want to say that like, not like it's not worth having money. Otherwise, why the fuck are we here? But it's not as important as people think it is. And I would have much rather, if I could go back to the beginning of last year before the tariff war, when I had $6 million, or in October, when I lost, I think $1.5 million in a day because I was heavily invested in crypto and being an idiot, not listening to the gold people, not listening to the AI people, because I knew it all. If I could go back and I could have just put like $1 million or $2 million, if X money was around back then, right now it's giving you 6%, dude. $2 million, $120,000 a year, and then you have cash to buy the dip if you need it. Yeah. I think people need to learn how to be more conservative, and until the time is right, take your risk when the time is right. I've done that before, and then I've done it wrong before too. And the last year has been a great example of that. And I hope people can learn from it, frankly.
Dude, I want to talk to you so badly about crypto. You're still following this very closely?
Yeah, I love it. I think there's actually a ton of opportunity there. I feel bad though, because I got excited about that at the absolute wrong time. I got into like every Bitcoin treasury company you could think of, and I probably bought BMNR before you did. And I was the fact that I'm still a multimillionaire is shocking to me, because the things I was invested in are down like 90 to 99 fucking %, man. So I'm still in them.
I think when everyone doesn't want to talk about crypto is kind of an opportunity. So I do want to
Totally.
spend a little time here.
Yeah,
Um,
yeah.
Tell me if I'm correct that there's a 4-year sort of cycle on Bitcoin, and usually that sell-off, that crypto winter lasts roughly in I think I've seen something. It's almost exactly a year long
Yeah.
on average, like something like 364
The
days. Or
winter,
something.
the winter is a year and a half roughly.
Okay. Okay.
It's somewhere like that. It's well, I mean, it can, yeah, it's probably about a year and a half, a little bit less than that. And then the summer, or like when it goes up, is usually 2.5. I was a person who, at the end of this last cycle, October, right before I lost a bunch of money, was telling everybody they were stupid because of the 4-year cycle, and that this was going to be the time that was different. So just whenever you say that, make sure that you think really hard about it, because you can be completely wrong. But I do think the 4-year cycle is still, I think it has psychological play. It doesn't really have that based upon the halving event anymore, even though it kind of does. It also doesn't, because there's so much supply that's already been distributed to the network that it's just not as meaningful as it used to be, new issuance. So I don't think the actual halving event, where, you know, the amount they issue every day gets cut in half, I don't think that's as strong, but I think the psychology is still there. And so I think people will follow that. And they are. Nobody's talking about Bitcoin and crypto. Nobody's talking about gold and silver either.
Now Chamath put out a thing very recently that
Yeah.
said that he doesn't believe that Bitcoin is going to come back as strongly because the marginal energy cost, if you have essentially additional energy, you can throw this towards Bitcoin mining, and, you know, some of these companies like corporations
that's no offense to Chamath, but that's some of the dumbest shit I've ever heard. And there's a reason for that. It's like the actual generating of the Bitcoin doesn't really matter that much. That could be just our government saying, hey, we want to make sure that we're, you know, providing access and keeping the Bitcoin network alive. So we're going to have some dedicated miners. We don't care. We're going to do it for cheap. We don't care about turning a profit. I think mining is a fucking horrible business. And I did that too. I made a bunch of money in mining, and then the market went down because I got into the shit in 2017. Instead of buying Bitcoin at $3,000 fucking dollars, Tanner.
You're not even trying anymore. You're not even trying.
Sorry. I will just do the beep and I'll remember. But no, I'm sorry. But no, I could have bought Bitcoin at $3,000. Instead, I put $100,000 of borrowed money from credit cards into mining equipment, and that was like not a good idea. So I don't think mining is profitable. And I think he's right about the fact that, like, people are going to move that money to like every Bitcoin miner is an AI company now, right?
Yeah.
Like they're all the neo cloud,
exactly,
whatever term we want to use. So I think that yes, you're right. They're all going to do that, but will they have some mining on the side? Maybe. And what matters is that we have enough hash, and the world has enough hash rate to fight off a country like China or somebody that could take over the network, because there's a 51% attack. The only way somebody wins is if they can control 51% of the network, and then they can fork it. And I won't go into all those boring details, but I did earn a lot of different weird Bitcoins back in the day, like Bitcoin Cash and Bitcoin Diamond and Bitcoin Gold and Silver and like a bunch of other crap, because everybody was doing that kind of stuff and thought it had meaning. All of it's gone now. But I think he's completely wrong. And it kind of saddens me, because Chamath is like one of the most brilliant people I've ever listened to. He's also an idiot. And by that, I mean like SPACs. Who loves Chamath because of SPACs? Probably nobody. And it astonishes me, frankly, that guy, as far as I know, owned up to 1 million Bitcoin or something like that. A huge number of the network way back in the day.
2012 or something.
Yeah, just an astronomical amount of Bitcoin. I mean, Michael Saylor would have been happy. He doesn't have that number. And it astonishes me that he could be so right and yet so wrong. But it lets you know, though, that opportunity is everywhere. And even a Chamath can be a moron and miss tons of stuff. Because if he would have held 1 million Bitcoin, I'm pretty sure he'd be a much richer person today. So you gotta, I mean, just because somebody has status, in my opinion, doesn't mean they're right. And that's the hard thing.
No, I think that's fair, but can we, like, a lot of those businesses, Cypher Digital and all these ones, or Cypher Mining at the time, and IREN and all of these companies.
Yeah.
If they do start seeing a higher margin in helping with infrastructure as a service rather than Bitcoin mining,
sure.
What is the threshold for the hash rate where we have to start worrying about like, oh, is the safety of Bitcoin now in question? Like,
That's a good question. It's got to be, so it's got to be a bad actor being able to get control over 50% of the network.
yeah,
And I'm just not worried about that. And here, I'll send you a link real quick. So that link actually gets you to something called Bitcoin mining map. And I'm not sure how good it is anymore. Let me see. Yeah, you can hover over the countries and you can see what percentage of the total hash rate of the earth they represent.
wow,
Right now, America is 37.84%.
yeah,
And Canada is 6.48. I don't think most people realize how much hash Canada has. And then you've got the Americas, which these countries have all been leaning to the right. 6 countries in South America have switched to far right. If you're really liberal and like hardcore political, you call them the far right, but they've switched sides, so they're aligned with America. I honestly think everything's going to work out fine between Canada and the United States too. So I don't think we're going to have to, stop talking to each other. I think they'll figure out that
13.2%.
Yeah, isn't it crazy? Kazakhstan, Borat.
That's wild.
Yep, they've been working hard. But like when you look at a country like China, they're 21%. So I'm not worried about it. And I don't. And again, Chamath is a very smart person. I'm pretty sure he doesn't have this map. I'm pretty sure he doesn't know anything about it. He's just talking out his ass about something he used to own a bunch of. And everybody does that. Everybody talks about things they don't understand. And I just don't.
I get paid to do it.
Yeah, right. So do I now. It's awesome. But again, it's one of those things where I wouldn't even factor in what he had to say about it. It means nothing. The Bitcoin network isn't going anywhere. I don't know if we're going to get a Clarity Act soon. We have until August 7th. It's not happening this day, but we have until August 7th. That's almost 2 weeks from now. There's a huge incentive, despite the massive political divide where every group votes for their party. There's still a massive incentive. They've been working on this bill for over a year. And there are younger Democrats who do not care as much about their politics. And they want this thing to go through. And the big hang up is like Trump coin and that kind of shit.
Yeah.
Sorry, I got bad again. But him making $1.2 billion. And like, that's a legitimate concern, right? Like the president making $1.2 billion the first year of his term off of a coin that's got his name on it and provides no financial value. And yes, I did buy it just because I like Trump. But that probably wasn't like a great thing. It probably wasn't an ethical thing. It probably wasn't a great thing. And so I think, but they're going to find, like, I think the Clarity Act now is good. And I know there's political people like Elizabeth Warren that are saying it's bad and it needs to be shut down. But I think that actually will pass. And we'll have proof of that in the next 2 weeks. And I think that would be really, that'll be a positive. That would actually make me think that Bitcoin goes higher between now and October, whereas everybody in this space that still exists, that hasn't, hibernated, they think that it's got to drop into October because that's what happens every time. And it's like, well, that can be dangerous too.
So this is for October is what you said. Like
October is supposed to be the day. That's what everybody's talking about,
Gotcha.
Or the month. But I think that that's kind of folly too. And I think what people will tell you that know Bitcoin is they'll say, but it has to drop further. It normally drops further. It used to drop 90% on the cycle. Then it was in the 80s. Then it was the 70s. Then it was like upper 60s. There's no way it stops at 52% or whatever the drop has been right now.
Right.
And I think that argument would hold weight if you didn't have companies like the Bitcoin Treasuries that lost 99% of their value, or even in Michael Saylor's case, his stock was $550. It's $92 today. So he's down he was down over 85%. A lot of the other companies, like I said, were worse. I think they're shock absorbers. I think they took a lot of the pain because nobody gives a shit about Bitcoin. When you look at the metrics, there's nobody there. The volumes are low.
Yeah.
The sellers are gone. It's all long-term accumulation with accounts that just don't move.
Yeah.
And so I think it's coming back with a vengeance personally. But I'm prepared to wait years for that to happen. And again, the administration, whether you like them or not, they want crypto and they want Bitcoin to succeed. Treasury Secretary Scott Bessent, I think, is one of the most brilliant people in this administration. I think Kevin Warsh is too, and I think people will realize that. I tried to tell people that he wasn't a hawk. Some people still think he is. He's not. But these people own Bitcoin and They've literally said over and over again, this administration, including these guys, that they will make a Bitcoin strategic reserve. So I think when you have that kind of power, and this, whether you like this administration or not, you can't say Trump takes a lot of naps and is lazy. He's passed 300 executive orders. I don't know anybody in the history of this country that's come close to that number. And so they're putting all their weight behind succeeding, because I think he knows that if he doesn't, he's probably going to prison, because the world is so politicized now. You could, like, it's one of those things where you can find the crime that people are guilty of if you search hard enough.
I completely agree with the idea of don't bet against the administration, whether you like them or not.
Yeah.
You know, you wouldn't have want to been invested in Enphase whenever Trump was saying how much he was anti-solar.
Yeah, that's true.
He's going to take away all the incentives, and you want to go to where the incentives are, because it's a massive tax or a massive levy for your business. So yeah, I completely agree with that. But outside of just Bitcoin, that's sort of a crypto sweeping policy in general. Are you also looking at Ethereum and these sort of things, and how are you playing those?
I actually think so Ethereum looks beautiful. It looks better than Bitcoin, and that's actually something I love. And I wish I could share my screen better. I'll have to make sure does it have to be Chrome? Is that what I have to do? Or maybe
I don't know. I had a guest that switched to Chrome and it worked.
Okay, maybe we can test it next time. But so Ethereum actually looks really good. It's there's something called the ETH to BTC ratio, and I don't know. Maybe I actually have that where I can send you a link. Let me find it. I'll do that real quick, 'cause it's a better guide. It's actually outperforming. It's actually outperforming Bitcoin in every cycle. That's the way it works, and I can tell you that because I've been in since 2017, and I've been a student of every previous one because I put a lot of effort and time into it. But every cycle, it's the exciting things that people care about, right? They want the next AI company, but in crypto. They want to get rich. They buy these shit coins. 99% of them are trash. It might even be a higher number than that. But they get excited, and they want to make money. And that same rule does not go away. It applies to everything. Oh, and I did find it, and I did not put this behind my firewall. So here, let me just do this, dude. This shows you the
my firewall.
Well, my subs.
I know.
I literally the last week, dude, I was like, F it. I'm not dealing with the people that have lost money all year and whatever the thing they're in. And again, I was heavy cryptos. There's a lot of bitter, angry people that blame me for their own choices. But if you look at that, that's the ETH to BTC ratio. This is almost a 10-year-old chart. And if you zoom in under the dailies, you'll see how this top left corner actually lines up with it. I don't know if you can zoom in and screen it all, but there you go. But that top left corner actually lines up really good with this. So you've got a very clean negative resistance trend line here. The thing is, it's wound up like a coil. And so ETH has started outperforming. It's hit the bottom two rungs of its support zone. It's getting ready to break out of a year-long downtrend. I thought it was going to do that this week. Maybe it's next week, with the passing of a Clarity Act in the next couple of weeks, if it happens. If it doesn't, then I would get ready for Bitcoin and Ethereum to roll over with a bunch of other stuff, and then they'll come back. And then maybe October is the big boom. But this kind of coil here, where you've got this getting ready to break out of a 10-year trend. Well, go look at gold, see what gold looked like after a 10-year breakout. Go look at silver and see what silver. And I know everybody hates Tom Lee right now. I still like the guy. He could definitely get a hairbrush, but he's a good dude. And he was completely wrong about Ethereum. I think he was telling everybody, like, go all in. We're going to be at 10,000 in a week. That did not turn out well. But I do think that what he's done with BMNR is smart, because Ethereum has an advantage to it. It's smaller. The network is only $223 billion versus like 1.2 trillion or whatever Bitcoin's at right now. So it's smaller, which gives you the potential for more growth. It's like several 100% just to get back to its previous all-time high. But then you throw BMNR on that, and he's going to do a preferred perpetual, where people can do what they've done with STRC and SATA, and those are way off par. I'm not going to go into all the boring mechanics behind it. I'm not worried about it, but he's got the ability to have staking revenue. And so the price can go up quicker. He's got staking revenue that will then be amplified. So their revenues will look amplified because the price went up. It'll look like they're making a lot more money. So the growth rate will look really sick, I think, in the future.
Yeah,
and then on top of that, they can use the preferred perpetuals to say, hey, we'll give you 11% return or something. And then they can start gobbling up money to be able to buy more Ethereum if he decides to. But he can.
Isn't that one of the like? So I don't know much about this strategy, but obviously Michael Saylor has done it a ton through strategy.
Yeah. Yep.
Or Michael Saylor's done this a ton through strategy.
Yep.
But I thought Tom Lee was really harping on the fact that they did not have these types of expenses, these types of, preferred payouts. And
yeah,
so,
he might have, but the last I heard, and again, I could double check, and then we could like have another meetup, and I can talk about it more intelligently. Because admittedly, like a lot of people, I haven't been paying attention to Tom Lee a lot in the last like 6 months. But as far as I know, BMNR is still looking for a preferred perpetual too. And again, they have this staking
I know
revenue.
they are. I know they are. I agree.
So
with
what were you saying about it? Sorry, go back.
But that it's a different strategy than the one that they had, let's say, a year ago. That a lot of investors were looking towards BMNR and saying, they don't have debt, they don't have a payout, they will be staking,
Sure.
And now we do have a payout, a little bit of an interest expense. Does that change things, or is this a good strategy?
Yeah, I don't know. It's all a gamble, right? Like whenever you invent new things, it's all a gamble. You never have 100% surety that you're going to win in anything in life. But I do think that if nothing else, the math looks good, because let me see here real quick. I'll tell you how much we have to get just to get to Ethereum's all-time high. So for Bitcoin, it's pretty simple, right?
Mm-hmm.
It's like you double it, and we're at the all-time high, so it's 100% return. Ethereum's 167. But then you also have that staking revenue. And then you have the fact that it's 1/5 almost the size of Bitcoin. And I can tell you how things work when people dial in, like people made a bunch of money off of gold miners. Why did they get into gold miners instead of gold, right? It's the same kind of thing, like Bitcoin miners, gold miners. Why did they do that? Because it was going to give them a bigger return, because the financials would start to ramp and look a lot better, and it would amplify the amount of gains that they could get versus the underlying asset. It's the same thing in Bitcoin. It's the same theory with Ethereum too. So if you're starting with a network that's much smaller, and let's say that it's got a really powerful narrative, Robinhood starts using it for like their version of a stable coin, has record, like, I think, what did they, I forget what company they, Hyperliquid, I think they passed them in a very short period of time. But you've got people like Tom Lee, you've got people like Vlad, you've got a bunch of others that are embracing this network and talking about payment rails. I don't know if Tom is going to be right about everything he says, but I know the narrative is going to be good. And so that in and of itself, in a market where people used to buy a freaking dog,
love you,
thank you, I'm trying, or cats, or whatever it was, like there was a pet narrative going on in the meme, or people were buying NFTs and they're like, bro, I got this picture, I paid $10,000 for it and it's going to be worth $1 million someday. And I'm like, I'm sorry, so you mean I could copy and paste that, but the thing that holds value to you is that it's registered on a chain somewhere. I'm like, if that was a house, I would tell you that's probably true.
Yeah.
If that was something like in a game, if it's Grand Theft Auto 6 and you've got the coolest item in the game and it's on a blockchain, I'll tell you that has some value to somebody, right? In a group of people.
Yeah, there's definitely, I completely agree with you. And some people get upset because of the NFT thing, but they're not seeing through the verifiable insurance policies, deeds, like
all the things that can be.
Yeah.
And so I think that narrative is strong and I think it's real. I don't know if it's everything Tom says it's going to be. I think Bitcoin and Ethereum are both going to be huge. I know there's people that like Solana. I would not touch anything outside of that. I think it's a elevated risk that nobody needs in their portfolio.
Sure.
The day of these garbage altcoins is over. It's just over. And I think, and don't get me wrong, not that some can't succeed, but I think your ability to succeed is very limited. And so I think that owning the miners of the Bitcoin and Ethereum space, which I think are the Bitcoin treasury companies and like Ethereum treasury company.
Yep.
And there's not going to be, obviously, there's not going to be a lot. Mark Moss, this one guy, he had something called Satsuma. I think they had like 600 plus Bitcoin. They just closed shop. They're bored selling everything and moving on. And there was somebody else. Who was it? Jack Muller, 21 Capital or something. He had one too.
Yeah.
And he was a CEO and he's backed out of that
He
too.
left.
That was tied in with Tether, I think. But there's going to be a bunch that fail. But like, I'm not worried about strategy. I'm not worried about the smaller company called Strive. It's got Matt Cole behind it. He's brilliant. A lot of really smart people in the Bitcoin space and the treasury space. They all work there now. And I'm not worried about them. I'm not worried about BMNR. I think all these things can do really well. I think you can get a multiplier to the underlying. I think it's much better to be invested in stuff like that if you're going to be in the Bitcoin and crypto space. I would not touch NFTs, memes, all this garbage.
Do you think that companies like BMNR get above MNAV and get like a sizable premium on them again?
Do you think people get greedy when they start making money?
Yeah.
Okay. Then that's the answer to the question, I think, because that's what happens every time. Mm-hmm. with every market cycle, right? You have a trough where nobody cares. And then you have the standard market cycle everybody's seen a bunch of times. And then eventually everybody gets euphoric, and the smart ones were bullish at the bottom when nobody was talking about it, which is probably why we're having this conversation now. And the people who don't do that, they end up chasing and they get wrecked. And I feel bad for those people. And I'm trying hard not to be that person this next time because I feel like I kind of was.
Yeah. No. Going back to the AI trade though.
Yeah.
Because we talked a lot about the macro and these sort of things. What are the companies in the actual sectors that you're looking at? Like,
oh, it's
AI
very
is a big
simple.
term.
It's just, for me, it's just memory because I don't know the rest well enough.
Right. Sorry, you said that and I apologize.
No, and you're fine. But I know there's people there's others like a Serenity and Chubby and like there's a ton of people in the AI space, and I read all their research.
Yeah.
But I know memory. And what really pisses me off about missing SanDisk and Micron and all this other stuff is that tech was literally like the driving force behind my life. It's what gave me most of my success. And I should have known. I should have listened to people about AI and started looking at the numbers behind the build outs for memory and how quickly they could adapt. I even remember listening to the Micron CEO, had the worst judgment ever. Not as bad as Chamath selling 1 million Bitcoin, but I listened to SMCI and saw, like, I looked at their chart and I was like, oh, I think I like their chart better. Worst mistake you can make. The other company, the CEO, I just got done listening to the CEO of Micron and I'm like, oh my God, he's right. And I even bought it. I even had options.
He's a genius.
He's a genius. And I was like, he's literally telling us what's coming. And then I just got bored with it, never went back, never listened to him again. And I missed out on a massive opportunity that he was going on CNBC and telling us about. And if we would have had, I blame AI for not existing well enough for me to be able to use a tool to be able to find out the truth back then, because I think now I would have get it. Because I use these tools to do my research, and I think everybody should, but I kick myself for missing that because it's like, that's my jam and I understood it and I should have followed that. I don't understand whether or not we're getting rid of all the copper and going into optical next. I don't know if this company's way better than that company. I would be lying to myself and the people on here if I said, this is a great one, because I looked at some technicals on a chart and drew out some squiggly lines like Mike Alfred likes to say. I'd be doing people an injustice. And I don't know. I don't know. I know memory, and I feel very confident that a forward PE of 4, 5, 6 is stupid, because I can see a bottleneck that goes out into 2028. And it's not like me saying this or looking at charts and making decisions. It's like Elon Musk and Tesla's earnings call, thanking how many CEOs does he ever thank in a conference call, thanking the CEO of Micron for giving him, God knows what the deal was, for a long-term and LTA contract to be able to make it to where he can build out his infrastructure while he works on Terafab. Listening to the CEO, Lisa, of AMD literally talk about how there's just not enough memory, or Jensen Huang. I don't know if you've heard of him. It's like, there's all these huge names and then all these other names that are brilliant and who made all this money. And they're telling me we're not done yet. And then when I look at the financials, it tells me that too, at such an easy way. And so like I told people before Tesla earnings that we could drop 15 to 25%. And I made a post about that. Not a lot of people liking it. I'm imagining that they just are so tired of owning Tesla, but it's like these things, I don't even know where my thought was on that. Maybe I was just trying to plug myself.
Well, I do want to talk about Tesla as well. What do you
That's
what
what
do you
it
think
was. That's what it was. It was a comparison between Tesla and Micron. And so when I look at a forward PE of like 6 on a Micron that has a growth rate that is insane, and I'm listening to all these CEOs say positive things and about talking about how demand doesn't even start to calm down until 2028 or maybe 2029. I can't help but be bullish on it, especially when I look at the forward PE on Tesla, a company that hasn't really gained revenues, has massive manufacturing build out sitting in front of it. And Elon's told us a million times that manufacturing is hard. I learned that in with the Model 3. I think it was 2018 or 19, something like that, when they were building that car out and they had to build it in tins. He's getting ready to do that with semis. He's going to be doing that with robots. He's tearing down old things. He's doing lithium refining, all this stuff. This is hard. And his forward PE on his company, I don't know what it was last time I checked. Is it 190 something? Let me see. Let me just see here. It is 141. That's what it says today.
Yeah.
So 141 or 6. And I'm sorry, what is their growth rate? 26% on Tesla. Let me look at Micron real quick here.
But you can't put them up just like that. I mean,
no, not just those figures, but I mean, revenue growth year over year for Micron was 346%. It was like 20 plus for Tesla.
Yeah.
And the PE ratio right now is 20.56. I mean, it was like 1400 for Tesla for a while. It's only in a couple hundred now, but that's not good. And you can look at other things. PEG ratio probably isn't super fair, but the profit growth for Micron year over year is 1368%. I could go back and look at Tesla's. It's not that good. And here's the thing. They're not going to be making a lot more money. Why? They're a hyperscaler. And don't get me wrong. I think there's some that will do better than others. But if I look at like the Mag 7 versus the QQQ, everybody was excited about it for the last month because they were all making their money back in hyperscalers again. Mm-hmm. That's been devastated this week. And it's because the narrative changed in earnings. People started looking at hyperscalers and they said, Capex bad. Capex bad because free cash flow go negative. And now all of a sudden they're realizing
they're down too.
Yeah, right. It's but they're looking at this and they're like, well, shit, they don't have any free cash flow anymore. And they're issuing more shares to pilfer us and take the stock price down. They're also not doing buybacks anymore. So you start to look at and go like you look at it. I look at it like this. You got the people spending all the money and taking your money to spend. And then you have the people that are getting all the money. Which one would you invest in, Tanner? I would say
he's getting all the money,
right? Like that seems like the right approach. And
here, 1 second. I'll demonstrate it for you. Give me
yeah, please.
Sorry, you can continue. I just wanted to.
Yeah, no problem. But yeah, no, I think it's the people that are receiving the money that I want to invest in.
I think it's the people getting the money.
Yeah. What does your hat say? Sorry.
NVIDIA.
Oh, okay, awesome. Yeah, so I think
NVIDIA.
I love NVIDIA. The only thing I don't like about NVIDIA is its size. It's huge. And when people, that's awesome. Super
NVIDIA
jelly.
GTC, baby.
That's cool. But no, I think NVIDIA is great. But you know what I think is happening with NVIDIA right now and has been for a while? It's I made 4,000 or 4,000%, whatever the number is on SanDisk. And so people are like, oh, well, I made 20% on NVIDIA. Ha ha. You know, it's just like people are greedy and they want more. And it's the right thing. It's the right thing. It'll wreck a lot of people, but it's the right thing at the beginning of a cycle of the magnitude of what artificial intelligence and an age of abundance is going to give us, even though it's going to be a crazy ride. I think it's a good one. And I think that it's going to keep going up in the future. And I think that, but I think what we want to do for now, because again, you know this, I probably learned this from you or people like you over the last couple of years, because I really wasn't paying attention to valuations. I was like, hey, look at my squiggles, look at this, I can draw stuff. But the valuation really does matter, and massive CapEx will it takes a while, right? Like a Bitcoin treasury company, they can issue, whatever, they can do their preferred offerings and scoop up a bunch of money, or they can issue shares and they can buy Bitcoin. And if that Bitcoin goes up, it's immediately accretive, like immediately. Nobody can do that, right? Like normally. But with some of these hyperscalers, they're like a big freighter. They're going to take a while to turn. And so NVIDIA is sucking right now because it's feeding everything else. And I say this all the time, but it's like the big containers go first. Gold went first, then silver. Bitcoin goes first. It'll be the leader, and then it'll jockey back and forth with the altcoins, and then they'll make a bunch of money. But there's usually rotations, and everybody made a ton off of NVIDIA, but all the people that made that money are like, well, NVIDIA's kind of sitting here. My friend just made 100% off Micron last week. I think I'm going to buy some Micron. And I think the CapEx argument just makes that all the more enticing, right? Like, all these guys are spending tons of money. They're going to have a payoff in the future. It could take a year.
Yeah.
It could take a year. And the narrative in the meantime is going to be garbage, but eventually it'll turn around again. And I look at NVIDIA and these other companies like that. Some of them might not win though. Some of them, they're going to spend like $1 trillion or whatever, a couple $100 billion. I don't even know. Numbers are so weird nowadays. We're just going to spend like $200 billion, and they might not get the payoff. Some of these there's at least one or two of these hyperscalers is going to have that problem, because there's all these new companies getting created that could replace them potentially. Mm-hmm. So I think people are like, I'm going to wait and see how the hyperscalers do, figure out which ones are still worth it. NVIDIA probably not going anywhere. And then I'll start investing in those, but I'm making money in the meantime. And so Jesse, I think that's it.
Jesse, man, that has been an awesome chat.
Yeah.
I put your links down in the comments, but dude, hope you're doing well. I got to keep up with you more often.
You do. I miss you too, man.
Yeah.
My Canadian brother from another mother. We got to hang out.
There you go.
I don't think they let me into Canada though. I didn't do anything wrong, but man, I said a lot of bad shit about Carney. Sorry about that. So you're going to have to come to me. No.
That's fair.
All right,
brother. I will wrap up the show.
Cool.
But everyone go check out Jesse, and we'll have you back on soon.
All right. Love you, brother. Peace, man.
Cool. Peace.
Bye.
Okay. Ladies and gentlemen, this has been a packed day. Absolutely packed. There was a couple donations that I wanted to get through just before we all go. Make sure you guys check out Jesse as well. It's link is in the chat still. There it is. But let's go through some of these. I know it's awkward to talk about, but could you please talk about how it made you feel when you made life-changing money? It's motivating, how your friends and family took it. I don't really talk about money with my friends and family. That's why I keep things pretty separated. Whenever I'm, in those relationships and I'm talking about what we have in common and what we love and these sort of things, I'm not talking about money. I think whenever people find out, those types of things, that it changes relationships. They start asking for things. They want you for different reasons. So I don't talk about that. How has it felt to make money though? Good. It feels securing. It feels that I can take risks and, do YouTube full time or something like this and not have to worry about if 1 week is lower than the other or something like this. I get to do what I want and go after the things that I want. Yeah. Take risks, right? I can hire Marshall and not have to worry about the additional salary or something like this, and we can test that out for a bit to see how that works. And yeah, I don't know. Top 3 bets / earnings plays for the next 2 weeks account for. Well, I don't really invest that way, but I do think that the semi companies are going to do very well, just like what Jesse said. I think that, and I don't even know if this is in the next 2 weeks. I don't think NVIDIA and these sort of companies show off earnings just yet, but a lot of the infrastructure plays is where I'm going to be focused. I think that those numbers will be mind-blowingly high. A friend to Jesse is a friend to me. Dude, me and Jesse have been talking for a long, long time. I think way before he made content. So, yeah. How do you make life-changing money? Did you have a company exit? Well, I think life-changing money is different for everyone. But if you talk about the amount of money that you need in order to quit your job and pursue your dream, I think that's considered life-changing. That was mainly off of investments on companies like Tesla, Shopify, but mostly NVIDIA, these sort of companies. Playing earnings is a great way for noobs to get slaughtered in the market. People who think about 2-week market moves provide liquidity to the market. I often think about that quote from Warren Buffett, where he talks about how the market is a game that moves money from the impatient to the patient. And he's not saying that. Like, there's a lot of people who have entered the markets in the last 2 years or 4 years who potentially look at those lessons as being dated. I would say if a lesson has been proven true over a 40-year plus period, it's usually going to be the consistent rule that persists even past that. They say that about books too. Like, books that have life lessons past 40 years are likely to be great books forever. How to Win Friends and Influence People, meditation, like, all the books that people go like, oh, I bet he's got, But the reason why those books continue to pop up over and over is that no matter what time you read them, they're usually pretty good life lessons. And same with Warren Buffett quotes and Benjamin Graham and a lot of these like seasoned investors who have been able to stick with it through decades, is because those types of things have held true. You're so close on those bleeps, dude. That's the thing, right? Jesse's a very polarizing person. He knows it. Everyone knows it. But honestly, you get to know Jesse. He's the sweetest dude around, but he obviously is polarizing with political commentary and stuff like this. But you don't have to agree with what he says to listen to his point. Yeah. Anyway. Opus 5 benchmarks are insane. So we did cover this. The part that I didn't cover is Opus 5 has the same pricing for both input and output for similar to Opus 4.8. Same pricing. So it's just a general Anthropic update. Okay. Back to glazing, I see. Do you love him? Dude, I got all the love for the people in my life. Jesse being one of them. He's a great dude. Okay. Okay, let's see. I like polarizing people so much. Oh, dude, he's got a lot of character. I love it. I love it. Tanner, why do you think we're babies? Because many of you guys act like babies. All right. Dylan, half the comments that you say talk about frickin' Jevon's paradox. Every single time I say it, you're like, oh, I told him that. So, yeah. And I think everyone in their investment journey is in different stages. So there's going to be people who listen to those, market from patient to impatient talk, and that's where they are. And then there's other people who want to hear about well, I don't know what the next example would be, but like more advanced commentary specifically on NVIDIA or something. And we'll have people on for both of that. Okay. This market is choppy today. Overall, NASDAQ is down nearly 0.7%. So not the greatest way to end out the week. Bloom Energy down 14%. Air Test Systems down 14%. HIMS down 13.3%. Nebius down 13%. A lot of the really high beta names, artificial intelligence names. The craziest way to end out the week on what ended up happening was Google was spending too much. What do you think they're spending on? They're talking about using third-party providers, buying more memory, getting more photonics, all of these things that's going to bleed back into the names that obviously Jesse just highlighted. However, Trump also has just said that they haven't made decisions on major strikes in Iran. We're talking with them now. Think that they're getting more serious as the days go by. We're locked and loaded and ready to go. That was 44 seconds ago. Sorry, never mind. That was like 3 minutes ago, but my screen hadn't refreshed. Okay. There have been some strikes, but maybe we're on a little bit of a pause. Hopefully by Monday, we can get something figured out and that we'll have a little bit more of a, easier macro to go into big tech earnings. We've got a lot of earnings next week. So with the new stream schedule, longer streams from noon to, 3:45-ish, I think is what we're kind of settling out at. That will allow us to cover all the earnings and everything. We'll have additional earnings for, the SoFis of the world that report in the morning, and then the Microsofts that report at night, and we're going to do both of those. They're going to be long days, but it's fun. But if you guys want to see some additional content, it's not just this channel where you can find that. We also have opened up a second channel now. The name is subject to change. More Future. I hate it. But Future Investing 2 didn't fit. Literally told me I have to think of a new name. But this is where all the interviews, rants, conversations, all that sort of stuff is going to be posted, earnings calls. If you guys could, I should say, please go subscribe. Get a little bit more of the extra content. Extra Future, yeah. Love the long streams and guests. Dude, the guests next week is looking even better than this week, and that's pretty surprising. I think, in the last 5 days have done 10 separate interviews, well covering earnings, well putting out videos. Someone made a joke earlier that it's when I'm low on cash, then you better hope that I continue to buy because we've been doing a lot better on these streams. Yeah, the name is Cheeks. All right. Thanks, buddy. Appreciate you. Ladies and gentlemen, thank you all so much for watching. If you guys are interested near Toronto or want to even fly out, we also do have a meetup August 15th here in the downtown core of Toronto. Sign up. I think we have 65 people going now. There's been a lot of signups lately. So if you're interested or in the area, check that down in the description. Until next time, bye for now.